Okay, good morning. So, welcome to SCM Marathon. Here. So, today we are going to cover only SCM part. So, no DM part or no QT part. I am not going to cover that. We are going to cover only SCM part. Okay. If you see the exam paper model, in section A, we are going to get 15 MCQs. Out of that 15 MCQs, most probably 7 to 8 MCQs we are going to get it from SCM part. But it's 7 to 8 MCQ questions. Clear? And this is the MCQ pattern after 2022 syllabus. If you can observe, in last exam only they have given 11 questions from SCM. So the most of the people who prepared QT part only, they faced very difficulty of writing SCM paper in previous attempt, because out of 15 MCQ questions, 11 questions they have given from SCM part alone. In rest of the attempts, almost like 7 to 8 questions from SCM part we are going to get it. And when it comes to descriptive part, so there will be 7 questions, as we already know. There will be 2 choice questions. We have to write only 5 questions. Clear? Now, out of 7 questions, 4 questions will be from SCM, and 3 questions will be from QT. Clear? And this will be the pattern for section B for SCM part alone. For SCM part alone, for the first 4 questions, this is how the question paper is coming from 2022 syllabus. Clear? Now, in question 2, they are giving marginal costing question for 14 marks. See, marginal costing in the sense, we are having 8 subtopics. We are having totally 8 subtopics in marginal costing. From those 8 subtopics, 3.1, 3.3, 3.4 and 3.5. These are the 4 topics where you can get 14 marks question. The other topics you cannot get 14 marks questions because they are very small topics actually. And for third, 3A and 3B, again you are going to get marginal costing only for 7 marks each. This will be for 7 marks and this will be for 7 marks. So totally 28 marks you are going to get from marginal costing. Clear? And even in MCQs also, at least minimum two MCQs you are going to get it from marginal costing. Got it? So totally 30 plus marks you are going to get from marginal costing alone. Clear? Okay. Next, 5A, 5B is from standard costing. It is a topic which is very, very simple. You can easily get 14 marks. Okay. And 4A, you can get theoretical question, practical question from ABC or JIT. It might be from ABC, throughput accounting. Mostly they are going to give from these 2 topics, but there is a possibility of giving from JIT and black plus accounting also. Clear? And 4B, you are going to get a theory question from quality cost management. This will be a theory one. As we are going to get 2 choice questions, just my suggestion is that you can leave these for a choice. If you leave these for a choice, almost you can leave 5 topics. You can leave this introduction to SCM, quality cost management, ABC, JIT, throughput accounting, black plus accounting. Clear? So why see, if you are already done with that, so do not leave for choice. Why I am saying that? Because in theory part, they may not offer you full marks, most probably. Clear? And there is, even if you wanted to attempt a theory part, there are 5 subtopics where you are supposed to prepare from quality cost management. Almost all the 5 topics looks very similar and it's confusing one. What it right? If you talk about Six Sigma, or if you talk about total quality management, or if you talk about value chain analysis, or business process reengineering. In all the cases, objectives looks like similar. Yeah, there is a lot of difference between each subtopic, but the objectives almost look similar, where you may get a little bit confused. By the time you read those 5 subtopics, you can revise whole marginal costing and standard costing. Clear? Even though if you leave this as a choice, still you are going to have one more question, and still you are having one more question to leave for a choice. Understood? That is just my personal opinion, but if you already prepared thoroughly, yes, you can go with this one. Clear? Now, in these 3 days marathon classes, I am going to cover in day 1 today standard costing, full standard costing. Full standard costing I'm going to cover, even if it takes 1:30 or 2 o'clock also. I'm not going to go with, as it is a marathon, I'm not going to go very fastly, because the objective of conducting this marathon is that most of the students ask me, sir, please at least give me some guidance in standard costing. But I wanted to make you that after this class, you should be assured with this 14 marks. So I will go a little bit slower. Okay, today alone, for 4.5 hours, I'm going to take standard costing. And tomorrow, in marginal costing, there are 8 subtopics. 4 subtopics I will take tomorrow, and 4 subtopics I will take day after tomorrow. I'm not going to cover this part, as we are having less time. If I have to cover this one, I have to go a little bit faster, which I don't want it to. Clear? Okay. So that's about the question paper and the index and what we are going to cover in these 3 days marathon classes. Clear? Now, so let's start with the first topic, standard costing, variance analysis. So to understand standard costing, first be thorough with the basic why the standard costing is arising and what is standard costing is. Clear? It's standard cost in the sense, at the beginning of the period, if you produce one product, let us say I'm producing one product, one unit. So to produce one unit, what and all cost I do require? To produce one unit, what are the different costs we are going to incur? Material, labor, variable overhead, fixed overhead. So at the beginning of the period, for producing one unit, how much material quantity is required? Material quantity per unit is required, as well as what should be the price of each quantity, each kg. Let us say, to produce one unit, you are supposed to use 5 kg of raw material. To produce one unit, you are supposed to use 5 kgs of raw material. Now, what should be the price? Each kg of raw material is 10 rupees. Each kg of raw material is 10 rupees. Clear? Now, these are the kind of standards which they are going to fix at the beginning of the period. Remember, standards are not going to be fixed for a certain volume of production. Standards will be always fixed for one unit at the beginning of the period. Clear? Whenever you are producing one unit, to produce that unit, how much kgs of material or how many units of raw material is required, and what is the cost of each raw material, and how many labor hours required for every unit. How many labor hours required for every unit, and what should be the rate per hour? Rate per hour. Then variable overheads. Most cases, not most cases, 100% of the cases in standard costing, they are giving variable overheads based on labor hours only. Clear? It means that if for 1 unit 3 hours are required, variable overheads also absorbed based on for those 3 hours only. And what should be the rate per hour? What should be rate per hour? Understood it? Similarly, fixed overhead also. It means at the beginning of the period, again I am saying, listen very properly, at the beginning of the period, we are going to fix standards for manufacturing of 1 unit. Understood, right? And standards are nothing but how many kgs of raw material required for 1 unit, and what should be the price of each unit of raw material. How many labor hours are required to manufacture 1 unit, and what will be the labor rate per each hour. Now what should be the rate of variable overhead per each hour? Clear? Similarly, what should be the overhead rate per each hour per fixed overhead? Understood, right? Now, after fixing the standards, again at the beginning of the period only, they are going to estimate some number of units, like they are going to estimate some production units. And where do they get that information from? So where do they get that information from? From budgets. So sales department will prepare a sales budget, and based on sales budget, production department will prepare a production budget, and based on production budget, procurement team is going to prepare purchase budget, and HR team or supervisor of an production department will prepare labor budget. Similarly, foreman, who is the responsible for all the overheads, he is going to prepare overheads budget. Clear? At the beginning of the period, we are going to estimate these many number of units I am going to produce. So let us say we are estimating that based on our sales demand, we wanted to produce 1 lakh units. We wanted to produce 1 lakh units. For these 1 lakh units, we are going to calculate budgeted cost using these standards. At the beginning of the period, we are going to prepare budgeted cost for budgeted units using standard rates. Using standard rates. Am I clear? So let us say for these 1 lakh units, based on these standards what we have prepared, let's say total cost is 10 lakh rupees, and this is nothing but budgeted total cost. Clear? Now at the end of the period, we are going to get actual cost for actual output. Clear? Let us say actually we have produced 1,20,000 units. Sir, we budgeted for only 1 lakh units, right? But why do we produce 1,20,000 units? Because sales team says that we got a sizable order, unexpected sizable order we got it. So please plan accordingly and produce 20,000 more units. So that is the instruction what we got it from sales department. Clear? So based on the instructions, we manufactured 1,20,000 units, and totally we have incurred 11,50,000 rupees to manufacture this. Now how much is the budgeted cost? 1 lakh rupee. What is the actual cost we incurred? 1,50,000 rupees. Now let us say the top level management is calling production department, purchase department, sales department, and every departments, and they are saying that we have given a budget of 10 lakhs. Why you have incurred 11,50,000? They are questioning them and they are scolding them. So don't you have any common sense why you are wasting resources? Something likewise is keep on scolding that. Then do you think that these people, this production department or departmental managers is going to agree with the top management? Definitely no. So what is the argument they are going to do? Sir, how can you compare these two? You have prepared a budget for 1 lakh units. You told me to use 10 lakh rupees to produce 1 lakh units. And as we got additional demand, I produced 20,000 rupees for 20,000 units extra. To produce that 20,000 units extra, definitely we are going to incur any additional cost, right? As because you prepared a budget for 10 lakhs, do you think that our missionary is going to give us those extra 20,000 units at free of cost? Definitely no, right? So definitely we have to buy raw material. So we have to spend additional labor. We have to spend all the resources definitely, and we are going to incur additional cost. And these two cannot be compared to evaluate the performance of individual departments. Then what's that? Then what should we do? So at the end of the period, so listen this line very carefully. At the end of the period, we are going to recreate the budget. We are going to recreate the budget for actual output, which is 1,20,000. Again, we are going to draw a budget only, but not with actual quantity, but not with actual price, but with standards only. Understood, right? At the beginning of the period, for these 1 lakh units, by using these standards only, we prepared a budget, right? Similarly, at the end of the period, for these 1,20,000 units, we are going to recreate the budget. We are going to redraw the budget by using standards only. Then what does it mean? As per budget or as per standards, for manufacturing of these 1,20,000 units, what should be the cost? With that cost only, we have to compare with this 11,50,000 to evaluate the performance of individual departments. Understood? So what we are going to do at the end of the period? At the end of the period, we are going to redraw the budget for 1,20,000 units, and these are called as budgeted cost for actual production, or also called as standard cost for actual production. Understood? So with these, let us say my total cost came to 11,30,000. Now we can say that you have incurred 20,000 rupees extra. Yes, I told you to spend 10 lakh rupees, but you have manufactured 1,20,000. For the same 1,20,000, based on budgets, based on standards, you are supposed to incur a cost of 11,30,000. Now you have incurred 11,50,000. Now why you have incurred that 20,000 extra, or who has incurred that 20,000 extra? Whether purchase department incurred, sales department incurred, or production department incurred, or a foreman overheads you have incurred. That's what we are going to compare with. So that is what we are going to do under standard costings chapter. Clear? Understood what we are going to see under standard costing? At the beginning of the period, we are going to give standards for producing 1 unit. So to produce 1 unit, how many kgs of raw material required? To produce 1 unit, how many labor hours are required? So based on standards, at the beginning of the period, we are going to draw budgets for budget output. At the end of the period, we are going to get actual output and we are going to get actual cost. Those two cannot be compared. Those two cannot be compared. So that we have to redraw the budget at the end of the period for actual production, which are compared with actuals to give the variance analysis. So that we are going to evaluate which department did good performance and which department did underperformance. Clear? It means in standard costing problems, wherever I calculate standard quantities, standard hours, I am supposed to calculate for actual production. If you can understand that single point, standard costing is very simple. Got it right? No. Now, first of all, what is this standard costing useful for? To control the cost. So at the beginning of the period itself, I am fixing. So you should not use more than 5 kgs for each unit. And let us say you are not supposed to spend more than 10 rupees to purchase each kg of raw material. In the beginning of the period, I am fixing some standards, right? So it means that purchase department or production departments has to work within that standards only. It means that we are controlling them. If you are not giving standards, the purchase manager may buy at the nearest place wherever he can procure, so that his work can be reduced. he won't go for different people and get quotations and evaluate where he can get at lowest cost. He's not going to do that one. But by giving standards, as he has to meet the standards, now he is going to work with care. Obviously, when we are watching, if someone is watching, then definitely he is going to work properly. Understood? He is going, definitely purchase manager will get to know that at the end of the period, they are going to do variance analysis and they will question me. If that is so, definitely is going to work properly. Understood, right? So standard costing is one of the cost control technique. We are controlling the cost. Am I clear? Okay. Now, what is the standard cost? It is a predetermined cost for all the factors affecting the cost. For all the factors like quantity of material, price of material, labor hours, rate of labor, rate of variable overhead, and fixed rate of fixed overheads and all is going to affect our total cost. For all those elements, for all those factors, whichever is affecting my total cost, at the beginning of the period, I'm going to give the standard. I'm going to say this is the predetermined cost and this is the cost within which you are supposed to complete your activity. Clear? Now, if you read this very properly, whatever we discussed now, the same points will be there. Standards are fixed at the beginning of the accounting period based on which budgets are prepared for budgeted level of production. However, the actual cost is known at the end of the period for actual level of production. So direct comparison between budget cost and actual costs are not fair or meaningful for evaluating departmental performance as they are at a different level of outputs. Clear? Therefore, a new budget for actual output, is prepared using same standards. Using same standards what we have given at the beginning of the period. At the end of the period, we are going to redraw the budget. But while drawing that budget, we have to use the same standards which we fixed at the beginning of the period. Clear? Now, it is then compared with actual cost to measure variances. Understood the base, everyone? Okay. Yeah, as we told that to compare with the actual cost under variance analysis, standard cost is always calculated for actual output. See, for the output whatever you produced, you have incurred some cost. For the same output, what should be the cost you are supposed to incur? Then only I can evaluate the performance, right? So, due to some reason, let us say I have asked you to produce 1 lakh units, but due to losing a sizable contract, at mid of the period, I told you to use only 60,000 units. And I've given a budget for 10 lakhs. For 60,000 units also, you have incurred, sir, let us say for 60,000 units, you have incurred 9 lakhs. Can you say that I saved 1 lakh? At the beginning of the period, I have given a budget of 10 lakh rupees to you for production and for producing 1 lakh units. And we lost a very good sizable contract, and due to which you only produce 60,000 units. And you have spent 9 lakh rupees. Can you say that, sir, see, you have given me a budget of 10 lakhs, but I have completed production in this year I have completed production within 9 lakhs only. So I saved 1 lakh. You are supposed to give me some incentives. If not incentives, at least appreciation. So call me in front of everyone. At least, if no incentives, at least buy you salva for 100 rupees. Can he ask that? Definitely not, right? Because he produced only 60,000 units only. Then how can I compare whether he incurred additional cost or lower cost? For the same 60,000 units, as per my standards, how much the cost used to be? Yes or no? With those two only I can compare. With those two only I should compare. Understood? Okay. Now, under variance analysis, we are going to check how much is my budgeted profit, but how much of actual profit I got. The difference in profit is because of variances of sales and variances of cost. And cost variances can be material, labor, overheads, and again under overheads it will be variable overheads and fixed overheads. So we are going to discuss one by one. See, to make it to understand, I am directly going to the first problem. While solving the first problem itself, I am going to explain every formula. Clear? Okay. See problem number 1. See here. For making 10 kg of Tata cement, a standard material requirement is given. It means at the beginning of the period, to produce 10 kg of cement, finished product, 10 kg of finished product, I should use 8 kg of material A, 4 kg of material B. So totally I have to give 12 kgs. During the process, definitely there will be some wastage, right? So totally 2 kgs will be the waste. With 12 kgs, I have to produce 10 kgs of output. Now the cost per kg is also given. As we already mentioned that standards will give you per unit only or per kg only, per unit of finished good only. To produce that only they are going to give a standard. Even for material, they says that for 1 kg or for 10 kg, at least they are not going to mention for the whole volume. Understood? So to produce every 10 kg, I am supposed to use 8 kgs of A, 4 kgs of B, and per kg, rate per kg, as we already mentioned that they are going to each kg of raw material. For that only they are going to fix standards, and they have given that information to us, which is 6 rupees and 4 rupees. Now during April, 10,000 kgs of Tata cement were produced. The actual consumption of metals is as under. To produce 1000 kgs, they used 750 kgs and 500 kgs of A and B at a rate of 7 and 5. Calculate all material variances. See, we are not going to have any formulas and take 1 minus 2 2 minus 3 and all. First, I am just gathering the whole data, whatever they have given, and representing in one table, just to make it easy for us to do a sum. Clear? First, standard price, actual price, standard quantity, actual quantity. See, I am using two materials A and B. Standard price and actual price, I am going to share this document to everyone. Please listen, because anyhow we are going to go a little bit faster. Concentrate on listening, no need to write it. Definitely I am going to share both the documents. Even with this rough also I am going to share. Clear? Notes I am going to share you, as well as this document with questions, everything I am going to share. Clear? Okay, listen properly. Now standard price. Standard price in the sense, per kg, what is the price at the beginning of the period they have assigned. So how much it will be? Six and 4. Now actual price in the sense, what actually we incurred, which is 7 and 5. Now to compare and calculate variances, definitely both standard quantity and actual quantity should be calculated for actual output only. That's what we discussed. Understood, right? So even standard quantity also I should always calculate for actual output. So SQ should be there for actual output and AQ also should be there for actual output. Then only they are comparable. Clear? So that is the reason why, to make it easy for us, I am writing actual output on the above, both standard quantity and actual quantity. What is our actual output? 1000 kg. So standard quantity is to be calculated for 1000 kg of output, and actual quantity is also, actual quantities they are going to give in question, definitely in every question, right? Now what are actual quantities? 750 and 500. Then what should be standard quantity of A? They told that for 10 kgs we should use 8 kgs of A. So for 10 kgs, if it is 8 kgs, then for 1000 kgs how much? That's what standard quantity. Because standard quantity is always calculated for actual output, and actual output is 1000 kg, and they told that 8 kgs we are supposed to use it for every 10 kgs. So for 10 kgs, if it is 8 kg, for 1000 kg how much it is? That's how we have to calculate standard quantity. Clear? For actual output, so how much it will be? 800. And what about standard quantity of B? For 10 kg, they're asking us to use 4 kg. Then how much is for 1000 kg? 400. So totally we are supposed to use 1200. But how many kgs you have used? 1250 we have used. Clear? Now let us say one by one variances first. Material cost variance. Now first of all, variance in the sense difference between standards and actuals. Actuals I got it for actual output, standards also I got it for actual output only. So they are comparable now. So we can compare those two now, and we can say whether production department or purchase department did their work properly or not. Clear? So first of all, variance in the sense difference between standards and actuals. So it can be standard minus actual, or it can be actual minus standard. But let us say I told to use 100 rupees and you are using 110 rupees. Is it adverse or favorable? Adverse, right? I told to use 100 rupees, you are using 110 rupees of material cost. It is an adverse. Even if you write 110 here and 100 here, still it has to be adverse only. Because you are incurring 10 rupees more, which is easy for representation. 100 minus 110 or 110 minus 100. If you get a negative value, adverse, positive value, favorable, it will not confuse us. You can write formula as standard minus actual or actual minus standard, both are correct. If you are taking actuals minus standards, if you are getting a positive value, it is adverse. If you are getting a negative value, it is a favorable. If you take standard minus actual, if you are getting a positive, favorable, negative, adverse, which is easy for us. Positive, favorable, negative, adverse is easy for us, right? So that let's go for standards minus actuals. But for revenue variances, if the same thing, if it is a revenue, I told to sell for 100, you sold it for 110. Favorable or adverse? Favorable. So 110 minus 100 is better, or 100 minus 110 is better? 110 minus 100 is better. So for revenue variances, use actuals minus standards. From cost, for cost variances, use standard minus actuals. Clear? Now we are doing cost variances. First we are doing cost variances, later we can go to sales variances. So for cost variances, for all the formulas, whatever the variance we calculate, it should be standard minus actual. But variance in the sense just difference between standards and actual, you can take any one. But for our comfortability, we are taking standard minus actual for cost variances, actual minus standard for revenue variances. Now, first material cost variances. I will not tell any formula. You tell me what, whenever they give prices and quantity information in question, what is the cost? You purchased 4 pens, each pen for 5 rupees. They have given that per pen 5 rupees, number of pens 6 pens, let us say. How much is the total cost? Per pen 5 rupees, number of pens 6 rupees, sorry, 6 pens, 30 rupees. So should I give the formula for that? Because we already know that formula in 4th class itself. Might be. Understood or not? So cost in the sense quantity into price. And as I want to take difference between standard and actual, as it is a cost variance, so it has to be standard cost minus actual cost. Then what should be the standard cost? Because cost is nothing but quantity into price. So standard quantity into standard price minus actual cost in the sense actual quantity into actual price. That has to be the cost variance. Clear? Easy na formula? Okay. Sir, if you take these for this question, for A, what is cost variance? Standard quantity is 800 into 6, standard price is 6, minus actual quantity is 750 and actual price is 7. How much it has to be? 450 adverse. And for B, 400 into 4 minus 500 into 5, 900 adverse. What is total adverse? 1350 is the total adverse. Sir, why did we got adverse? So we told to use 1200 kg to get 1000 kg, but they used 1250 kgs to produce 1000 kg. It means their productivity is not good. Understood, right? So we called production department. As a manager, I called a production manager and I'm asking him, so you have used 50 kgs extra, so we have incurred 1350 as adverse. So give me some explanation. Give me your explanations. That's what I asked. Sir, at what price you told to purchase A? 6 rupees per kg. But what price purchase manager purchased it for? 7 rupees. That is the reason why there is more variance. So for me it is very less variance only, because for 1200 kg it is 50 rupees extra, for 50 units extra. But for every 6 rupees they spend 1 extra rupee. So I'm not the major person who is responsible for this much of adverse. Purchase manager is the responsible for that. I'm not the responsible person. That's what he is arguing. Clear? And okay, I said okay, and I sent him, and I called a purchase manager. So production manager also said that yes, there is 1350 total adverse. His part is very less. So okay, agreeable. But major part of cost is because of you only. So give me explanation. Then he may says that, sir, if you see lower cost products they are using, see, okay, not he may says that, no sir, I have incurred only 1 rupee per kg extra, as because there is change in mix. You told to use in the ratio of 2:1, but they are using in some other ratio. That might be the reason why there is high variance. So not because of me. That's what he is arguing. Understood, right? So to whom I have to blame, or to whom I can ask for reasons? So if I ask purchase manager, is saying production manager is responsible for that variance. If we ask production manager, purchase manager is responsible for that. That's what they keep on arguing. So now I have asked cost accountant to come. Sir, this is what they're arguing. Then he will say that, sir, do not be worried. So I'm a cost accountant and I can say out of 1350, how much is the variance because of price difference and how much is the variance because of usage difference. Clear? So that as cost variance itself is not enough to evaluate the performance of various departments. Why we are doing variance analysis? To evaluate the performance, and if there is any adverse performance, so we are going to see, it's not because to scold someone or it is not because that we have to blame someone. If whatever the mistakes we done now, if we know how much is the volume of the variance we got or how much is the magnitude of the amount there is a difference, then we will get to know how much it is impacting our organization, so that to rectify that one, what should we do? So even rectifying the mistakes also we are going to incur some cost. So spending that cost is important or not, or is necessary or not. Let us say there is a small variance of 10 rupees. Just assume that small variance of 10 rupees. Identifying the reasons why we got the 10 rupees loss and rectifying that one costs us 2000 rupees. Will you try to identify that one? Definitely we are not going to try to identify, okay, let it be 10 rupees only. No, if we have to try to identify that one, so there are two managers has to work on that one where the salaries per hour is more than the 10 rupees variance. Yes or no? So that if we know the amount of variance, then only we will get to know whether we should take actions or not, whether we should do any corrections or not, and all such things we have to make a decisions. Understood? So that is the reason why I should know the amount of variance. Later on I will decide whether if it is a controllable or not controllable. If it is a controllable, how can we control it? And all such things we can decide it later. Am I clear? So price variance, usage variance. Clear? What is variance? Standard minus actual. Price variance, standard price minus actual price. So whatever the variance I am calculating, for that standard minus actual I am supposed to take it. As it is a price variance, I am supposed to take standard price minus actual price. But sir, in question, standard price and actual price they given per kg, right? Yes, I got to know variance per kg. Then what about because of change in this price, total in the cost variance, how much it is impacting? How much it is impacting? It means that I have to multiply with the quantity. For which quantity I am supposed to multiply? Should I go for actual quantity or should I go for standard quantity? Actual quantity. Let me give an example why it is actual quantity. So let us say you wanted to buy 4 biscuit packets and each cost is 5 rupees. Earlier when you bought it, each biscuit packet is 5 rupees. And you are about to go for a shop. You have taken money from your father, 50 rupees you have taken, and you asked for 20 rupees, but he says that there is no change. So he has given a 50 rupees note. And everything is watched by your sibling. So if you are buying 4 biscuit packets, definitely your sibling also wants, but he or she has not listened number of units, but she listened that you are going to buy biscuit packets. So she is going to call you. So how many biscuit packets are going to buy? I will buy 2. Will I say 4? Will you say 4 to your sibling if they call us? So they got to know that you are buying biscuit packets and your sibling is calling you. And if she is asking or if he is asking you, so how many biscuits packets you are going to buy? Normally we say less than half. And if you are good sibling, half. Definitely more than, not more than half. Yes. Agree? So you said 2 biscuit packets, and so your sibling says that okay, I also want 2. Though he or she is not willing to eat biscuits now, but still, as you are buying, he or she has to buy. Yes or no? So you thought to buy 4 units, but you are about to buy 6 units, and this is standard quantity, and this is actual quantity, let us say. And you have given 50 rupees note. You have given 50 rupees note and asked for this 6 biscuit packets, and has given 6 biscuit packets. How much is the change he is supposed to give? How much is the change he is supposed to give? 20 rupees, right? Yes, sir. Each biscuit packet is 5 rupees, but he has given 14 rupees to you. And you checked it, you counted, it was 14. Uncle, you did some mistake. I'm supposed to get 20 rupees, but you have given only 14 rupees. What do that uncle will say? Beta, just turn out the biscuit and check the MRP once. Now the MRP is 6 rupees. Understood, right? We thought to buy it for 5 rupees, but each biscuit packet we had to buy it for 6 rupees. Now, what is the cost which I thought to incur? I thought to incur 20 rupees, but I incurred 36 rupees. So how much I incurred totally? Totally, I incurred 16 extra rupees. So why I have incurred these 16 extra rupees? Both because of change in price as well as change in quantity. Now, because of change in price, how much extra money you spend? So for each biscuit packet, 1 rupee you spend it. 1 rupee. Then totally, just because of price change, let us assume that if there is no price change, how much is the money you might have spent? 30 rupees. Just because of price change, you have paid 36 rupees. It means 6 rupees, right? Got it right? But now you say, uncle, please at least give me 2 rupees back, because I thought to buy only 4 units. I thought to buy only 4 units. 2 extra units. 2 extra units I bought it because of one of the idiot at my home. So I'm not responsible for that. Can you please give me 2 rupees back? Do you think that he's going to give? No, right? It means that the price variance, if there is 1 rupee extra cost per kg, it will be incurred for each kg you bought or each kg you buy, not each kg you thought to buy. Understood? Huh? The price variance you are going to incur for each unit you buy, not for each unit you thought to buy. Am I clear? So that it should be out of total variance because of change in price, whatever the quantity you purchased, for each quantity there will be a variance. That is the reason why actual quantity into standard price minus actual price. Clear? Understood? Okay. Next, what about the usage variance? Or so, let me have that example. Now, what about the usage variance? Usage in the sense quantity. First, variance is nothing but standard minus actual. So it has to be standard quantity minus actual quantity, because whatever the variance I'm finding out, standard minus actual of that. But sir, this is going to give us only quantity variance. But I want how much is the cost difference because of change in quantity. This gives us number of units variance only. But what about the amount then? Then I have to multiply with the price. Now, should I multiply with standard price or actual price? Now listen, not actual price here. Listen, it should be standard price. Listen, the reason why it is. Sir, because of change in quantity, how much extra money you spend? How much extra quantity you bought? Obviously 2 units. For each unit you spend, let us say if your sister or brother has not told you to buy that extra 2 units, still you might have incurred 4 into 6, 24 rupees. Avuna? Yes. Now you are incurring 36 rupees. It means how much extra you are incurring? 12 rupees you are incurring. But out of this 12 rupees, already this price variance is going to show you 2 rupees variance, because for each unit you buy, because of change in price, you have shown it here. Did we show here 4 rupees or 6 rupees? Which one you have shown here? For actual quantity you have shown. Actual quantity includes the extra 2 units. Agree, actual quantity includes the extra 2 units. Out of this 12 rupees, 2 rupees you are incurring because of price change. Let us say if there is no price change, if there is only quantity change, how much might be the extra fund you might have spent? 10 rupees only. Whenever your sibling is asking you to buy 2 biscuit packets, immediately what you thought? Okay, we have to spend 10 more rupees. Because of change in quantity, I have to spend 10 more rupees. But actually, because of change in quantity, I incurred 12 rupees extra. But out of the 12 rupees, because of price 2 rupees, and because of quantity 10 rupees. As because of price I already showed there, if I take actual price here, it will be a double impact. Clear? So out of the 16, 6 rupees is for price, means how much has to be the quantity then? 10 rupees only, right? If we take 12 rupees, it means the extra price variance you are showing in price as well as in quantity also. So that as you already shown price variance separately, because of change in only quantity, if price is not changed, how much should be the variance? That's what we are supposed to show it here. Understood? It has to be standard price. If you take actual price, it means you are taking price variance once again. As because you've already shown price variance, now if price is not changed, only because of change in quantity, how much is the variance we might have got? That is the one which I am supposed to show in usage variance. Clear? Understood? Now for A, so how much is the price variance? Actual quantity is 750 into standard price is 6 rupees, actual price is 7 rupees. So 750 adverse. For B, actual quantity is 500 at a rate of 4 minus 5. That is equal to 500 adverse. So 1250 adverse is because of price variance. Understood that? Out of 1350, 1250 is because of purchase manager. Clear? Now what is standard price? 6 rupees. Standard quantity is 800 minus 750. How much? 300. Favorable. And B, 4 rupees into 500 minus, 400 minus 500, which is 400 adverse, 100 adverse. Clear? So out of 1350, 1250 is because of price variance and 100 because of usage variance. Clear? Now, sir, why do you got this usage variance now? Why did we got this usage variance of 100? We got variance, right? What are the reasons? One is, I told to mix in the ratio of 2:1, but you are mixing in the ratio of 3:2. So what is the mix I told to use A and B? 2:1, but you are mixing in the ratio of 3:2. As there is change in mix, your price can change. Let us say well-known example. If you wanted to make a chapati at home, definitely we are going to use atta, but at restaurant or at hotel, any tiffin center, do you think that they are going to use Ashirwad atta? Definitely not. Then how do they mix? They mix 4 kgs of maida, 2 kg of atta, or some whatever it might, the proportion depends upon the hotel it is. Let us say, as a owner of the hotel, I told to use 3 kg of maida and 2 kg of atta and mix 5 kg. With these 5 kg, produce 10 plates of chapati. This is the instructions which I have given. Understood? I told them to use 3 kg of atta, 3 kg of maida, 2 kg of atta. With 5 kgs, I want 100 plates to be manufactured or 100 plates to be prepared. Clear? But what that chapati master did is, he mixed 2 kg of maida, 4 kg of atta. High cost one he is using more. High cost one is using more. It means definitely there will be a cost variance. As he is using more high cost material, there will be more cost, more actual cost. Clear? Now, so how many kgs he mixed? 6 kgs. With the 6 kgs, how many plates he is supposed to produce? No, with 5 kgs 100. With 6 kgs, obviously 120, but he produced only 110 kg. Do not compare these two and say that his productivity is good. No, his productivity is not good, because with 6 kg I am supposed to produce 120. Can I compare with these two? Definitely not. What I am going to do, this is the standard, and now I am going to revise the budget for 110 kg. To produce 110 kg as per standard, how many kgs are required? To produce 110 plates, how many? 5.5 kg. Agree? Sir, this is budget. Can I compare budget with actual? Because actually I produce 110 kg, 110 plates, right? So to produce the same 110 kg as per my budget, how much should be the standards? Clear? So 5 kgs of total mix I have supposed to mix to produce 110 kg, and that should be in the ratio of 3:2. So what is in the ratio of 3:2 means? 3.3 is to 2.2. It means he is supposed to use 3.2 kgs of maida and 2 kg of atta, but he is mixing 2 kg of maida and 4 kg of atta. And because of mix, will there be increase in price? Yes, because he mixed high cost material more and low cost material lower. That is one reason. Okay, fine. You mixed it wrongly, but at least with 5.5 kgs only, you are supposed to produce these 110 plates, right? But you have taken 6 kgs. Forget about the mix. I forget about the mix at least. With the 5.5 kg itself, we are supposed to produce 110 plates, but now you are preparing with 6 kgs. So mix is one difference. The other difference is you are supposed to, this has to be the size of the chapati as per standard, but you are making chapati at this size. That also makes some loss to the hotel. Not just the mix, even after mixing, the standard size of the chapati is to be smaller than the actual what you have prepared. Even that size also is the one of the reason for the loss to us. It means we got the usage variance because of two reasons. One is because of mix variance. The other one is because of productivity. Yield in the sense productivity. Understood, right? You might have listened yield, right? Let us say in 1 acre, I'm supposed to get 30 bags of rice, but I got only 28 bags of rice, then what do we say? We didn't get the proper yield. My yield is lower than normal. My yield is lower than the normal yield, which causes loss to the farmer or not. Similarly, here I spend 100 rupees extra, not just because I used high cost of raw material more. It's also because my productivity. Am I clear with this, right? Okay, now he wanted to analyze, because he has to take, management has to take some steps, right? So there is a usage variance of, there is some adverse usage variance. I'm supposed to take some steps. What should I tell? Because the people who is going to mix raw materials is a separate team. The person who is manufacturing the product is a separate team. So to whom I can question then? I should definitely know, because of mixing people, how much is the variance I got, and because of the productivity, how much is the variance I got. Remember, when I talk about the productivity, he never bothered about the mix, because some other person in some other room as mixing maida and atta, that has hand over to the chapati master. Now chapati, irrespective of maida and atta, whatever the mix it might be, with 5.5 kg only he has to give 110. Yes or no? So that whenever I'm supposed to calculate yield variance, I should make mix constant. If mix is not changed, then only because of change in yield, how much is the variance, I got it. Similarly, when I am calculating mix variance, here 100 variance is because of both mix and yield. But how much of that is because of mix and how much of that is because of yield? I'm supposed to evaluate it separately. So that when I'm evaluating mix variance, I'm supposed to keep yield as constant. When I'm evaluating yield variance, I'm supposed to keep mix variance as constant. Understood? So then what should we do to make it constant? So I have to calculate something called as revised standard quantity. I'm supposed to calculate something revised standard quantity. Sir, what is this revised standard quantity? Okay, how many kgs you used? 1250. Okay, forget about this example. Done. Chapati is done. Let's come back to cement. How many kgs you have used? 1250. 1250. At least the material what you used, if you might have mixed in the proportion what I told, what might be the usage of A and B? Yes, your productivity is lower. You are supposed to produce 1000 kg with 1200 kgs only, but you are using 1250 kgs. Okay, I agree with that. But if you might have mixed that 1250 in the mixture, whatever I told, what quantity of A you might have used and what quantity of B you might have used. That is what revised standard quantity. The revised standard quantity is nothing but total actual quantity in standard mix. Total actual quantity in standard mix. Understood, right? So these 1250 in standard mix, how much it has to be? 3:2. Sorry, 2:1. So then simply these divided by these into this. 1250 divided by 1200 into 800. How much? 833.33. 400 equal to 216. 416.67. Understood? Sir, never bother. First question only I'm going to take very slowly. From the second question it will be very fast, because once you understood the concept, it will go fastly on. What it surely we are going to complete it. Clear? Okay. You understood what is revised standard quantity? Revised standard quantity is nothing but, okay, for the material whatever you used, at least if you might have used in the mix whatever I told you, what might be the quantity you might have used. Clear? That is what revised standard quantity. Clear? Why I am calculating that, sir? Because while calculating mix variance, my yield should be constant. While calculating yield variance, my mix should be constant. Then only I can evaluate how much is mix and how much is yield. Because these 100 adverse is because of both mix and yield. Out of that 100, how much is mix, and out of that 100, how much is the yield. Sir, remember, yield talks about productivity, so it concerned about totals. Yield concerns about totals. Mix concerned about the proportions. Understood, right? Yield forget about whatever the mix it is. With 5.5 kg, you are supposed to produce 110 plates, irrespective of the mix. If you are using more than that, it means your yield is not good. Understood? So by keeping mix as a constant, whenever you are talking about yield concerned about totals. Mix will concerned about the proportions, how they are mixing. Clear? Now when I calculate mix variance, yield should be constant. In which two cases yield is constant? Yes or no? And when I say mix variance, it should be standard mix minus actual mix, whatever the variance it is, standard minus actual. And this is having actual mix, and this is having standard mix, right? Then standard mix minus actual mix means what? RSQ minus SQ. Whenever I calculate mix variance, yield should be constant. My yield is constanted in AQ and RSQ. Now, while calculating mix variance, it should be standard mix minus actual mix, and this is having standard mix and this is having actual mix, right? This is as per standard 2:1. This is actually they mixed in 3:2. So it should be RSQ minus AQ. So RSQ minus AQ. So this is only quantity. Then what should be the price? Obviously, when we calculate usage variance, price has to be, that is just subparts of usage variance. So both those two also will take the same price, standard price only they are going to take it. Now what about the yield variance? So yield means what? Productivity. It means that with 1200 kg, you are supposed to produce 1000 kg, but you took more number of kgs. It means your productivity is not good. Compulsorily your yield variance will be adverse. Here itself I can say that because your productivity is not good, because you used 50 kgs extra, irrespective of the mixage. To get 1000 kg, you are supposed to use 1200 kg, but you are using 1250 kg. It means your yield is not good. And whenever I compare yield variance, our mix has to be constant. So where there is difference in yield, here and here and here and here. Yes or no? These 1200 I have to compare with 1250. But 1250 is there at two places, right? Then where I should compare with? When I am comparing yield variance, mix should be constant. And this is having which mix? Standard mix. This is having actual mix. So this is not the one which is to be compared. And this is having standard mix. It means these two columns I am supposed to compare. Yes or no? Out of those two, what is standard yield and what is actual yield? Yields are totals, right? What is standard total? 1200. Actual total is 1250. Yes or no? Because this is total actual quantity, right? This is total. Standard minus actual. Variance in the sense standard minus actual, then it has to be SQ minus RSQ. Yes or no? So this is standard yield and this is actual yield. So standard minus actual, so it has to be SQ minus RSQ. See, RSQ is having standard mix actual yield S. So in the mix it comes under standard, at yield it is coming under actual, because RSQ is actual quantity in standard mix. In mixed variance it is standard, in yield variance it is actual. Understood? So that's about the total formulas of material variance. If you understood material variance, all the rest of variance formulas are similar to this. Clear with this logic, right? We are not going to mark up any formula. Even when we are solving the next problem, we are going to draw very quickly all the formulas, so that you can understand. Application will be very easy if you understood the concept which we discussed till now. Got it? Now let us compare. For A, how much? Standard price 6, RSQ 833.33, actual quantity 750, 500, exact 500. Okay, 500 favorable. Next B, 4 into 416.67 minus 500. 333.33, yeah? 32 adverse. Net. Is this exactly 500, or give me the exact answer by taking 0.33? Just take 0.33 and take exact value. Clear? 499.98. 499.98 favorable. So how much it will be? 166.66 favorable. Now let us go for this yield. A, how much is standard price? 6. Standard quantity 800 minus 833.33. 1 adverse. Next B, 4 into standard quantity 400 minus RSQ 416.67, which is 66.68. 68 adverse. Total adverse, it has to be 266.66 adverse. Then only it will match 100 adverse. Clear? Understood every formula? That's about material variances. Got it? Now, first of all, just for examination purpose, these three formulas you understood, right? Standard quantity into standard price minus actual quantity into actual price. Then price variance, as it is a price variance, standard price minus actual price, and it is always for actual quantity, because for whatever the quantity I buy for that only I am going to get a variance. And if price is not changing, just because of change in quantity, how much is the variance? So price is not changing, change in quantity. Sorry. Now, for mixed variance, take the same formula, but definitely in mixed variance and yield variance, I should introduce RSQ. That we have to remember. There is RSQ, not RAQ. With practice, at least you will get to know that there will be RSQ only. So in the place of SQ, take RSQ and rewrite the same formula. In examination, to do it little bit quicker. So you know it, sir, making yield constant, what is the mix, comparing that, it may take some time for you. Yes, conceptually we understood already, but to do it quicker, write the same formula, but in the place of SQ, make it as RSQ. Now, if RSQ is coming at standard, here it has to be actual. As it is AQ, it has to be SQ. Here also, if it is AQ, then it is just -1, and this will become 0, right? Understood? So here AQ, so it is SQ. So take the same formula, place it RSQ, and from this formula, as RSQ minus AQ, it is SQ minus RSQ. RSQ is nothing but, when you in mixage, it is standard, but in yield, it has to be actual, because RSQ is actual total yield in standard proportion. So here, if it is a standard, here it has to be actual. Now you can write all the formulas easily, right? Understood? Okay. So that's about material variances. There is one small subtopics are there. If let us say if you are consuming in FIFO, if you are consuming in LIFO, then how the price variances will change, or else whenever we are calculating price variance, should be calculated at the time of purchase or should be calculated at the time of consumption. That are the extra point what we are getting, that also we are going to see. Clear? Okay. Okay, take just 2 minutes break, not more than that, because it's a heavy topic. At least we want 2 to 3 minutes break. As live is going on, let's take a short break just for 2 minutes. Okay. Okay. Now let us see problem number 2. First of all, everyone understood all the formulas, right? Got it? Now let us check whether we can apply those formulas properly or not with different problems. We can solve 3 more problems per material cost so that we can check whether we can apply it properly or not. Okay. Heat. SV Limited manufactures BXC by mixing 3 raw materials. For every batch, 100 kg of BXC, 125 kg of raw material was used. It means that they're using batch costing. So whenever they start a batch, how many kgs they are going to introduce? 125 kgs they are going to introduce. And how much is the output they are going to get? 100 kgs of output they are going to get it. Clear? In April 2021, 60 batches were prepared to produce an output of 5600 kg. Clear? Now the standard and actual particulars of April 2024 as under. This is that as per standard we have to mix in the ratio of 50, 30 and 20%. But as per actual we are supposed to mix in the ratio of 60, 20 and 20. And this is that quantity of raw material purchased. So we have purchased 5000 kg, 2000 kg and 1200 kgs of raw material. So as we purchased 5000 kg, does it mean that we have to use all the 5000 kg? No, this is not actual quantity used. This is actual quantity purchased. Am I clear? Now calculate relevant material variances and also calculate material price variance at the time of purchase. Also calculate price variance at the time of purchase. So let us see how to calculate this, because I have not yet covered this in this problem itself. We are going to check what is that. Clear? Okay. The first thing is that we have to make a table. Standard price, actual price, standard quantity, actual quantity. Clear? Now how many material we are using? 3 materials we are using. And what are the standard price? 20, 10 What are the actual prices? 21, 8 and 6. 21, 8 and 6. Now remember, both standard quantity and actual quantity has to be for actual output. Yes, how much is actual output? Sir, in April 2021, 60 batches were prepared to produce an output of 5600 kg. It means they produced 5600 kg. Clear? Then what is actual quantity? Actual quantity, see, the question clearly mentions that for each batch I will introduce 125 kg. I'm supposed to get 100 kg. See, if I get more than 100, it means my yield is good. If I get less than 100, it means my yield is not good. That is a secondary. But first of all, in this question, did they mention you how much is the actual quantity? For producing 5600 kgs, how much is actual quantity? So in previous problem, they mentioned that to produce 1000 kg, 750 kgs of A and 500 kgs of B. This is what we used it. But how many kgs of ABC we used to produce 5600 kg? They have not given. Instead, they have given the ratio what they mixed it for. Then definitely I should know how much is the total quantity I used actually. It's very simple. Question clearly started with, in every batch, whenever I start, I will introduce 120 kgs of material. And I'm supposed to get 100. Let us check it later whether we got really 100 or not. That is a secondary. But every batch I will introduce 125 kgs. So now it is 60 batches I am manufacturing. It means I might have introduced 60 into 125 kgs. Clear? Sir, I have given four questions. In these 4 questions, all possible different ways, however they can ask in materials variances, I have given. Understood, right? First question, they will give straight away actual quantity. In the second question, they have not given actual quantity, but they told that every batch we introduce 125 kgs and we did 60 batches. It means for 60 into 125 should be the actual quantity of introduction. So what should be actual quantity now? 60 into 125, which is 7500. Now these 7500 should be in the ratio of 60 is to 20 is to 20. In examination, you have to calculate separately AQ of A, AQ of B, AQ of C. Separately you have to show it. Now I am not showing. Clear? Just give me the calculation part. 4500, 1500, 1500. Now, what about standard quantity? Sir, they told it very clearly. 100 kgs output, to get 100 kg output, I should mix 125 kgs. Then to get 5600 kgs output, how much I am supposed to mix? Now, first, what is standard quantity? Standard quantity is always for actual production. Now, definitely for 1 kg or 2 kg or some kgs, definitely question will help us with standard. Yes, what did standard tells us in question? Every batch of 100 kg of output of BXC, 125 kgs of raw material were used. Am I clear? It means what the standard is telling us, to produce 100 kg of output, we should use 125 kgs. Then what is our actual production? 5600. And our, in comparison, here SQ should be always calculated for actual production, and that is standard for actual production. Standard for actual production. Now what is the standard they have given? For 100 kg output they have given. Yes or no? For 100 kg output we should use 125 kgs. Then to get 5600 kgs of output, how much we are supposed to use it? Got it? Understood this line, everyone? For 100 kg, I am supposed to use it 125. Then how much is for 5600 kg? How much it will be? 7000. So this has to be 7000. And these we have to mix in the ratio of, sorry, 50:30:20. Or 5:3:2. How much? 50 in the sense 3500, then 2100, 1400. What is RSQ now? RSQ is simply actual quantity in standard mix. So 7500 into 50%. In this ratio we have to mix it. Actual quantity in standard mix, right? 3000, 750, 2250, 1500. Clear? I'm not applying all the formulas, but I'm applying only price variance. Clear? Now, what is material price variance formula? Material price variance is equal to actual quantity into standard price minus actual price. Clear? Now, for A, actual quantity is 4500 into standard price is 20, actual price is 21, so it has to be 4500 adverse. For B, 1500 into 10 minus 8, 3000 favorable. For C, AQ is 1500 into 5 minus 6, it is 1500 adverse. Totally 3000 adverse. Totally 3000 adverse. Clear? And this is based on consumption. This is based on consumption. But sometimes if question specifically asking you calculate material price variance based on purchase, or simply it's not based on purchase, at the time of purchase. At the time of purchase, then it has to be same formula, AQ into SP minus AP, but instead actual quantity consumed, I'm supposed to take actual quantity purchased. Understood right? Here AQ, what did I have taken to prepare this 5600? How much of the kgs I consumed, I have taken that. But instead of taking these things in cost variance, in all other variants, you have to take this only. Only in price variance only, sometimes they may give us to calculate at the time of purchase. Understood? So here when you are filling this column, even if question tells you to go at the time of purchase, you take consumed only, because RSQ is always for actual quantity consumed in standard mix. Not all other formulas will change. Only price variance only. Sometimes they wanted to check at the time of purchase how much is the variance they got. Understood? Sir, why, sir, at the time of purchase, why should we look for? See, he purchased 10,000 kg. Now I used only 4,000 kg. But I'm evaluating the performance of purchase manager, right? As next, for the next period also, he already purchased it. If I consider 10,000 adverse will be more, right? Then I can take corrective actions on him. Yes, sometimes we may buy raw material which is required for 3 months, right? What did? So in real time, remember, variance analysis has to be done at the end of every month. Understood? When you go for a job, when you become a cost accountant, definitely 90% of the companies will do variance analysis at the end of every month. Sir, why sir at the end of every month? Sir, it is one of the cost control technique. If we did some mistake in April, if we get to know 31st March, what is the mistake? Already 11 months will be completed, right? So there will be more damage already happened before rectification. So all the cost control techniques, when you go for a real time, when you go for a job, you have to apply it for end of every month. And companies like ITC, they are doing twice in a month. They call it as fortnight. It means every 14 days, 2 weeks. Not, they won't bother about monthly. So every second Saturday and fourth Saturday, they are going to do variance analysis. Sorry, second Friday and fourth Friday. Second Saturday and fourth Saturday is holiday. Anyhow, for every Saturday is a holiday for them, right? So as a cost accountants, definitely we are going to have 2 days a week holidays, right? So every second Friday and fourth Friday, we are supposed to do it, variance analysis. Because it is a very big company, we should identify the damages at the earliest point of time, so we can rectify it very quicker. Understood? So that is the reason why they are hiring with 14-15 lakhs. For inventory management alone, ITC is paying 14 lakhs, 15 lakhs package per annum for CMA freshers. Only inventory management. Because their materials cost, the material cost what they are consuming each month is in crores of rupees. What it right? So only for metal management. So that is the reason why, as they're already paying you good money, they're going to ask you do variance analysis 2 times in a month. Even if they ask you 4 times in a month, we have to do it as we are taking money. Yes or no? Okay, anyhow. See here. So material price variance at the time of purchase, that should be equal to, sir, for A, how much is the actual quantity? For purchased quantity, 5000 kg. 5000 into standard price is 20 minus 21, which is 5000 adverse. B, 2000 and 1200. $2,000, 10 minus 8, 4000 favorable. C, sir, we purchased 1200, then how can I consume 1500? You might have already having some closing stock, right? So previously opening stock we might have had, right? That we might consume it. At least don't question the question. So 1200 adverse. So how much it will be? 2200 adverse. This is at the time of purchase. Then actual quantities we are supposed to use the quantity what we buy. If question is silent about it, then we should calculate variance for quantity what we consume. If question specifically asking us to go with at the time of purchase, then only we have to go for, we have to calculate price variance with purchased quantity. And remember these note points. When purchase price is calculated on quantity consumed, then material cost variance will be equal to price variance plus volume variance. But when price variance is calculated using quantity purchased, understood, right? Let's say question is asking you to go for quantity purchased, and when you calculated cost variance is not equal to these two, don't bother, kangar padkandi. Clear? Because here I'm using quantity consumed, here also I'm using quantity consumed, but he as in price variance, as we are using purchased quantity, so definitely it will not tally. It will not tally. What it? Not to be worried about it. Clear? Okay. Understood about second question, right? So in this question, what is the new point we learned is, sometimes actual quantity consumed they may not give you, they're going to give a ratio. But in the first itself, they told that whenever we start a batch, we start with 125 kgs, and how many batches we did actually? 60 batches we did actually. So So for 60 batches, 125 kgs each. So 7,500 kg we have introduced and we got only 5,600 kgs output. Remaining thing is a loss. And what about actual standard quantity? Standard quantity straight away. To get 100 kg of output, I should use 125 kg. Then to get 5,600 output, how many kgs I am supposed to use it? Clear? Okay. See problem number 3. Yes, you were reading quickly. See, a manufacturing unit produces a finished product by using 3 basic raw materials, and the given the standards usage is 25% of A, 35% of B, and 40% of C. Whatever the input we give, that input has to be in the ratio of 25%, 35%, and 40%, and these are the standard prices. Now the standard loss in the process is 20% of the input. Then what do they said? Whatever the input we give, we are going to lose 20. Let us say if we give 100 kg as input, we are going to lose 20 kg and the output will be 80 kg. Understood, right? Got it or not? Okay, that is as per standard. Now during a particular month, the company produced 2,400 kgs of finished product. The details of the stock and purchase as under. So to produce 2,400 kgs, they have given how many kgs they consumed will be opening stock, closing stock, and purchase stock they have given. It means what is the consumption formula? Opening stock plus purchases minus closing stock. That's how the quantity we are supposed to take it. Clear? Sir, opening stock cost might be different. Closing stock cost might be different. So that is the reason why they given. The opening stock is valued at standard cost. Then compute material price variance and cost variance when variance is calculated at the point of FIFO and LIFO. On two bases, we are supposed to find out price variance and cost variance. But then what about usage variance, sir? Sir, usage variance, anyhow, I am going to take standard price, right? I don't bother about actual price. Actual price only for opening stock and closing stock, there are different prices. But standard price is already constant. So for usage variance, either it is FIFO method or LIFO method, there won't be any change in answer. Got it or not? Okay, by drawing a table, you can understand that. Let us see. First, standard price, actual price, standard quantity, so what are the standard prices? 4, 3, 2. Now what about actual price? If you see, opening stock is valued at standard price, remaining 800 kg we purchased. From opening stock and 800 kgs only, 350 kgs will be the leftover one only. If it is FIFO, we use this, and this 350 will be the leftover from 800 kg. If it is LIFO, first we consume from here, and whatever the closing stock is left over will be from the opening stock. So what will be the price for the first 100 kg? Sorry, what is opening stock? 200 kg. 200 kg is valued at 4 rupee. Then 800 kg is valued at, calculated 3600 by 800, 4.5 rupees. And for the next one, 150 is valued at 3 rupees. $150 valued at 3, and 1000 kgs are valued at 3.5. Next C, 2 rupees, and first 300 units are valued at 2 rupees. Next 1100 kgs are valued at 1.8 rupee. And remember, both standard quantity and actual quantity is always for actual output. What is actual output? 2400 kg. Now first let's talk about standard. What do they stand? Standard quantity calculation. Whatever the input we give, from that there will be a loss of 20%. It means if I give 100% of the input, out of that I am going to lose 20%, and the output we get is 80%. Now I have to calculate the input for what output? Obviously 2400. Clear? Standard quantity input I should always calculate for actual output. It means output we got it. Understood? It's very simple one. Never bother about whenever there is given standard loss. Don't get anxiety. It will be very simple. Standard quantity should be always calculated for actual output. Clear? Now they say that to get an output of 2400 kg, how much of the input I am supposed to give as per standard. Now as per standard, whatever the input we give, from that we lose 20%, and we are supposed to get 80% output. And now I am supposed to calculate the input for the output of 2400. And what should be the input now? 2400 is for 80%. Then how much is for 100%? So how much it will be? 3000. So 20% of that is 600. So this has to be 3000. Clear? So when they give standard loss, understood how to take it? Clear everyone? So even though they give standard loss, if you have to calculate input, that should be for actual output, and actual output is 2400. To get that output, how much of the input I am supposed to give? So for 80% if it is 2400, for 100% how much it is? Easy, right? Okay. Then it should be in the ratio of 25 is to 35 is to 40. Then tell me what should be the ratio, what should be the values? 750, 1000, 1050, 1050, 1200. Clear? Then what about actual quantity? Actual quantity has to be 200 plus 800 minus 350. That has to be the actual quantity. How much? 650. Next, 150 plus 1000, opening stock plus purchases minus closing stock, 950. Then next, 300 plus 1100 minus 200. That has to be 1200 total. $2,800. Now these 2,800 we should distribute in the ratio of 25:35:40. How much it will be? 700, 980, 1120. Clear? Now let us calculate. First let us use FIFO method and calculate material cost variance. Material cost variance is standard quantity into standard price minus actual quantity into actual price. So for A, what is standard quantity? 750 and standard price is 4. So 750 into 4. Now FIFO or LIFO has to be applied only for actual price because there is variance in actual price. There is no difference in standard price. Standard price is 4 rupees right away. But actual price for 200 kgs it is 4 rupees. For 800 kgs it has to be 4.5. That's what they said. As I am supposed to use it FIFO. Now actual first 200 kgs I am supposed to use 4 rupee. Remaining, what is actual quantity total? 650, right? Out of 650, first 200 I am supposed to use it at a 4 because it is a FIFO, and next 450 at should be at the rate of 4.5. So it should be 450 into 4.5. Clear? I'm not writing values. Just type equal to how much adverse, how much favorable. I'm not going to fill as for rest of the sums. Clear? Just I wanted to make you to understand how to solve it. Clear? Next B. For B, understood, right? A, B, C, everything. Next, what is material price variance? Material price variance is equal to actual quantity into standard price minus actual price. Now for A, actual quantity 650 and actual price for some it should be 4, for some units it should be 4.5. It means for the first 200 units, it has to be 4 minus 4. Standard price is anyhow 4 for every quantity. Plus for the remaining 450 units, standard price is 4 but actual price is 4.5. So this will become 0 and this will become half of that. So it has to be 225 adverse. Clear? Similarly we do for A, B and C also. Now what is if we go for LIFO? If I go for LIFO, material cost variance is equal to standard quantity into standard price minus actual quantity into actual price. And for A, anyhow standard quantity is and standard price is same. And for this, so the whole 650 I should use from this batch. The whole 650 I should use it from this batch. So it has to be 650 into 4.5. That's it. Clear? And if it takes for C, it has to be 1200 into 2 minus, as it is LIFO, out of this 1200, first 1100 I am supposed to use it for 1.8. So it has to be 1100 into 1.8 plus remaining 100 units. I have to use the standard quantity of 2. Clear? Next, material price variance. Should be equal to actual quantity into standard price minus actual price. For C, I am calculating out of 1200, For 1100 it should be 2 minus 1.8. For 100 it should be 2 minus 2 only. Actual quantity into standard price minus actual price. And actual price is for the 1100 units it has to be 1.8. For 100 units it has to be 2 rupees. So it has to be, for 1100 units it has to be 2 minus 1.8. For 100 units it has to be 2 minus 2. Clear? Understood, right? So that's the difference between LIFO and FIFO. Now what is the formula for usage variance? Material usage variance is equal to standard price into standard quantity minus actual quantity. Anyhow, I am supposed to use standard price only, right? Is there any segregation in price in standard price? No. So even if it is LIFO or FIFO, I will get the same answer for usage variance. There will be difference in only price variance and cost variance. And if there is no change in usage variance, there is no change in mix and yield also, because that will be a part of usage only. That will be the fourth point. So material consumption under FIFO and LIFO methods gives different values for metal cost variance and metal price variance. And FIFO and LIFO will give different answers for cost variance and price variance, but usage variance will be the same under both the methods. And again it will tally. Again definitely it will tally. Usage variance plus price variance should be equal to cost variance, right? The reason behind it tally is the difference between these two and difference between these two will be same. By doing full answer you get to know it will tally again. Under FIFO, cost variance, price variance plus the usage variance what we get here, it will tally. Cost variance is equal to price variance plus usage variance. Under LIFO also, cost variance will be equal to price variance plus the same usage variance. Clear? Okay. So that's about material variances. If you observe in 3 problems, we have seen 3 different models, 3 different approaches. First problem, actual standards is always easy. Standard quantity is always calculated for actual production. Here for 10 kgs they have given how much is for 10,000 kg cross multiplication. Here for 100 kg they have given 125 kgs, and for actual production we did a cross multiplication. And here they told that whatever the input you give, as per standard you should lose 20 kgs and we should get output. And for the actual output 2400 kg, how much is the input we do require? That output is for 80%, how much is for 100%, and the same we segregated using ratio. That's about standards. And if we come to the actuals, here they have given directly. Whenever they give batches, they might not give you actual quantity used. Then how to find out? See, at the beginning of the question itself, they clearly mentions that every batch will start with 125 kgs of input. And how many batches we did actually? 60 batches. Then actual quantity has to be 60 into 125. Understood or not? So that is how we have to see. Thing is that you have to practice. If the question gives like this, then how to approach that? Different questions we have to practice. Clear? Now in third case, so actuals they given opening stock, closing stock and units purchased, and consumed stock will be always opening plus purchases minus closing stock. That is how we get how many stock we have consumed, how much of the stock we consumed. Clear? Understood? The maximum, these can be the different problems they can give it from material variances. Clear? Okay. Next, let us see labor variances. Sir, labor variances are very much same as material variances. So let us do it very quickly. Labor variances with no idle time. First, labor cost variance. What should be the formula for labor cost variance? Standard hours into standard rate minus actual hours into actual rate. Then labor rate variance, labor, see, hours difference in the sense whether he is doing fastly or slowly. How much time I have given, how much time we have taken. Understood, right? It means whether you did work little bit faster or slower. And whenever we measure work faster or slower, it means it has to be efficiency. If he's working fast, it means he's having more efficiency. If he's working slow, he's having less efficiency. So that variance is called as efficiency variance. Standard hours is the time what I have given for actual output. Actual hours is the time what he has taken for actual output. So it measures the fastness of the work. So that is the reason why it is called as efficiency variance. And what is rate variance? Standard rate minus actual rate, as it is a rate. And it should be calculated for each hour how much extra I paid. That's what SR minus AR will give. For how many hours ever I paid, for those many number of hours, only I'm going to get variance, right? So it has to be actual hours. Same logic as materials. Then standard hours minus actual hours for standard rate. Then this also because of two reasons. One is mix, which is also called as gang. Let us say I told them to mix 5 skilled and 3 unskilled labor, but they are mixing 3 skilled and 5 unskilled labor. Definitely number of working hours will increase. I told them to mix 5 skilled, 3 unskilled, but they mixed 3 skilled, 5 unskilled. Because of that mix, hours is increasing, efficiency will impact or not? So because of change in mix, how much of efficiency is impacting? Will efficiency impact or not? If you are taking more unskilled labor than the budget and less skilled labor, number of working hours will increase. It means your efficiency is increased. Why do your efficiency is impacting? Because of having lower skilled labor, higher unskilled labor. So because of that mix, how much it is? Then even after mixing, sometimes they may work slowly. Yes or no? Their productivity is not good. Within the given time, they have to manufacture many number of units, but they are manufacturing lower units. Their productivity is not good. So that will be given by yield variance. So you got some efficiency variance because of gang mix. What is your variance? And because of productivity, how much is the variance? Clear? Now what should be the formulas? Shortcut SR into, in the place of SH, RSH. Same, whatever is their efficiency, same formula you borrow down. But in both the formula of mix and yield, I am supposed to use RSH. So it should be RSH minus AH and SR. As it is AH, here it has to be SH minus RSH. Clear? Okay. Next. Labor variance with idle time. So remember, whenever there is idle time, it means that your cost is increasing because of 3 reasons. One, rate might changing, efficiency might changing, and some labor is idly sitting. Even when the labor is idle, you are supposed to pay the money. Yes or no? So because of idle, how much is the cost? So your cost variance is because of 3 reasons now. One is rate, efficiency, idle. What it right now? What is rate variance? standard rate minus actual rate per actual hours. Now let us talk about the efficiency. Sir, I have taken the attendance, timekeeping, and I came to know that labor is working for 110 hours. 110 hour for the same work whatever he did, I have given 100 hours, but he has taken 110 hours. I'm calling him. So I have given 100 hours. I have seen your attendance. You worked for 110 hours. It means you are working slowly. Your efficiency is not good. Explain me. That is the question I asked him. And immediately he may says that, sir, on 4th of this month, you can check the track record. On 4th of this month, mission got breakdown. 9 o'clock I came to the factory to work. From 9 to 9:45 I did the work. At 9:45 suddenly they got a breakdown of machinery. So what should I do with that? And whole day they did repair only. The whole day I sit idly. In 9 hours period, I got a chance to work for 45 minutes. In a 9 hours period, I got a chance for only 45 minutes. Yes, my attendance is giving you 110 hours. But there is a mission breakdown. Am I the reason for mission breakdown? What you are supposed to do time to time, you have to do some maintenance. If you are not doing maintenance, mission will get breakdown definitely. If you are not giving your bike for repair, or what is normally showroom people will tell you, for every 6,000 kilometers, if it is 350cc or above, or if it is 150cc, for every 3,000 kilometers, you are supposed to give it for a service. You are supposed to change your engine oil, and all your chains and all has to get lubricated. If you are not went for a service, you are continuously using for 7,000, 8,000 kilometers. Suddenly your bike got breakdown. You are calling to showroom and says that you sold me waste bike. Why it is? Can you call? Can you ask? No, right? See, if mission got breakdown, management is there is a mistake from the management side. You are supposed to do proper maintenance time to time. As because you did not do the maintenance properly, how can you question me that I work for more number of hours and my efficiency is not good? Understood? So definitely we are not supposed to claim. Let us say that day 8 hours he sat idly because of not availability of the mission. And again he is saying on 14th, you can check, at 9 o'clock I came to factory. I went to stores and storekeeper says that there is no stock available. Understood? Who has to maintain proper stock levels? You are supposed to maintain proper ROL. EOQ you are supposed to buy. Minimum stock level you have to buy. Safety stock you have to maintain. You have not properly maintained your stock levels, and there is a stock out. I almost sat idly for 5 hours on that day. I am the responsible for stock stock out of material? No, management is the responsible for that. So do not include that hours also. So if you deduct these two, how many working hours are there really? Attendance is there for 110 hours. Payment they got for 110 hours. Payment they received for 110 hours. But actually, to evaluate the efficiency, whether the particular person is working fastly or slowly, we cannot include these 12 hours, right? Agree or not? So actually, it means for the output what he got, he really worked for only 98 hours. So 13, right? So 97 hours. Understood? With these 97 hours only, I'm supposed to compare the efficiency, not with 110. So that what should be the formula here? Standard hours minus actual hours worked. Actual hours worked with standard rate. Then what is the rate variance? Rate variance means because of change in rate, how much extra you paid. How much extra you paid means for how many hours you paid. For that hours only you are going to get variance. How many hours you paid? Though he worked for 98 hours, but you paid it for 110. Yes or no? See, efficiency, the purpose of efficiency variance is whether the worker is working slowly or fastly. because of efficiency of the employee, how much is the extra cost we incurred. While calculating efficiency, if I take actual hours paid, labor is not going to agree for that. But price variance, why we are evaluating? Because of change in rate, how much extra payment I made. I paid it for 110 hours, right? So I have to take for all the 110 hours. And even cost variance also have to take actual hours paid only. Understood? Clear? Means for cost variance and rate variance, I have to take actual hours paid. But for efficiency variance, I have to pay. So I have to take actual hours worked. Because cost variance, my purpose of calculating cost variance is how much I thought and how much I paid. Irrespective of the reasons, how much I thought to pay and how much I paid. I'm not blaming there anyone. So I can take actual hours paid. Even the rate variance, because of change in rate, how much extra I paid. So for how many hours you paid, the same hours you have to take it. But efficiency, we are talking about the speediness of the worker, so that because of management, if there is any idle time, we cannot blame that labor. So that after detecting those idle time, how much of the hours you actually worked for those hours only we are supposed to compare. Clear? Then what about idle time variance? That's the remaining between those two. That's because from difference between actual hours worked and actual hours paid. Even for that he paid it, right? So that is the reason I have to take idle time. So here for actual hours paid, what are the reasons? Rate variance. In efficiency variance, I actually took only worked. The difference between that worked and paid is allocated to the idle time variance. And again, these efficiencies subdivided into two. What are those? Mix and yield. So what should be the mix variance? SR into same formula, RSH minus AHW. Sir, RSH means actual hours in standard mix. Sir, actual hours there are two, 110 and 98. Is I have to take 110 in standard mix or 98 in standard mix? So 97. 97 in standard mix. 97 only, because while evaluating efficiency variance, we should forget about actual hours paid. We should always take actual hours worked. While doing problem, we are going to see anyhow, not an issue. So here, standard rate into standard hours minus revised standard hours worked. Understood the formulas? All the formulas understood, right? So for cost variance and price variance, we have to take actual hours paid only. But efficiency variance and its subparts, they will consider only actual hours worked. And the difference between worked and paid will be categorized to idle time. Clear? Okay. See problem number 4. A gang of workers normally consists of 30 skilled, 15 semi-skilled and 10 unskilled. They are paid at a standard rate of 70, 65 and 50. As per standard, they have given that 30 skilled workers has to work, 15 are semi-skilled and 10 skilled workers has to work, and this has to be their wages. In a normal working week of 40 hours, the gang is expected to produce 2000 units of output. Expected to produce. That is nothing but standard. And it means all this standard, it means skilled labor working for 30 into 40 to produce 2000 units. Clear? Unskilled labor working, skilled labor working 30 into 40, semi-skilled working 15 into 40, 10 skilled labor working 10 into 40. For all those hours, I should make 2000 units as per standard. Now, during the week end 31st March 2019, a gang consists of 40 skilled, 10 semi-skilled, 5 unskilled. The actual wages paid are 75, 60 and 52 respectively. 4 hours were lost due to mission breakdown. Who is responsible for mission breakdown? Management. So labor is not concerned with that, so that while evaluating his efficiency variance, I should take only 36 hours. I should take only 36 hours, not 40 hours. And 1600 units are produced. Let's see the table very properly. Standard rate, actual rate, standard hours, actual hours paid, actual hours worked, and revised standard hours of worked only I am supposed to take it. Clear? Skilled, semi-skilled, unskilled. So what are the rates for 60, 70, 65, 50? 70, 65, 50. What are actual rate? 75, 60, 52. 75, 60, 52. Clear? Now, both standard hours and actual hours is always calculated for actual output of 1600 units. Clear? Now, what is standard tells us? What is standard hours of skilled? Listen very carefully. Standard hours of skilled is, they told that to produce 2000 units, 30 skilled has to work for 40 hours. 30 into 40. Then how many hours they have to work to produce 1600 hours? Understood our standard hours? They given to produce 2000 kgs. See this part very carefully. To produce 2000 units, they given standards. Then how much is for 1600 units only we are supposed to calculate. Clear with this line, everyone? Okay, how much it should be? 960. So it has to be 960. Then what about standard hours of semi-skilled? To produce 2000 units, 15 semi-skilled has to work for 40 hours. Then how much is for 1600? 480. Then HS of unskilled is equal to 10 skilled workers has to work for 40 hours to produce 2000. Then how much is for 1600? 8, 320. And what should be the total standard hours? 1760. Clear? Now the same thing you can calculate in another way also. Totally how many workers are there? 30 plus 15 plus 10. 55 people has to work for 40 hours to produce 2000. How much for 1600? 1760. We'll get the total and then distribute that total in the ratio of 30:15:10. That's your wish. You can go with any method. Understood, right? Totally 55 people has to work for 40 hours to produce 2000 units. Then to produce 1600 units, what should be the total number of working hours they have to work for? 1760 and that 1760 you can distribute in the given ratio, or else individual you can find it out and make it total. You are going to get 1760. Clear? Okay. Then what about actual hours paid? How many people worked? 40 skilled, right? So it has to be, this has to be 40 into 40. 1600 they'll get a payment, right? See, 40 people working for in a 40 hours week. Like when in a 40 hours week means actually in 40 hours week 40 skilled labor worked, but what is, they received payment for 40 hours, but actually they worked for only 36. So 36 into 40 is worked. 15 1440. Understood how to calculate? So next, 10 semi-skilled people is working for 40 hours. That is 400, 360. Then 5. So 40 into 5, 200, 36 into 5, 180, 180. So how much total? 2200, 1980. Now when doing RSH, I'm supposed to take actual hours, right? Which hours I'm supposed to take? RSH is calculated for the subparts of efficiency, and for efficiency we should consider actual hours work. That's what we discussed, right? So this one I'm supposed to take it and should be distributed in the ratio of 50 is to, so 30 is to 15 is to, or else simply 1980 divided by 1760 into 960 equal to 480 equal to 320 equal to. The calculator also you should not find it out again and again. Just follow this shortcut. Everyone do that. 1980 divided by 1760 into 960 equal to. Do not press anything. Just 480 equal to 320 equal to. You should get answers. Understood? Because whenever after making equal to, without applying any function, if you give any number and equal, and again if you press equal to, lastly whatever the number you have taken, that will replace that and they will give answer. Understood what I am saying? If I take 1980 divided by 1760 into 960 equal to, you'll get some answer. How much it is? 1080. Without pressing anything, just 480 equal to, if you make it, last number 960, right? In the place of that 480 it will apply and it will give answer. And if you press into again, it will change it. You should not press any other function. After pressing equal to, just to press 480 equal to, again 320 equal to. So they are going to give straight away answers. Understood? Okay. So how much it will be? 540, 360. Understood? I'm not applying any formulas. If you get this table, now I think you should apply the formulas. Understood? So these two columns are used for efficiency. Hours paid is used for cost variance and rate variance. In cost variance and rate variance, wherever we get actual hours, you can use actual hours paid. But efficiency, yield, mix, for those three we have to use this. Clear? Same formulas. Okay. Can we move to next one? So next one is variable overhead variances. Sir, material is variable, material cost is variable, labor cost is also variable, and variable overhead is also variable. However, we got material formulas, similarly we got labor formulas also. As variable overhead is also variable, we will get the same formulas as material and labor. Understood, right? So variable overhead cost variance. And sir, variable overhead will be based on either labor hours or based on quantity. But as I told you that for your syllabus, definitely they will give based on hours only. Or else they give some portion in quantity and some portion in hours. Even when they give in quantity, we can convert into hours. I will show you how to convert also. Understood, right? We have to convert into hours and I have to use labor formulas only. Clear? So what should be the labor formula? Standard hours into standard rate minus actual hours into actual rate. See, hours, standard hours and actual hours will be same as labor, but rate they will give separately. Wage rate will be separately, they are going to give you. Overhead rate they are going to give separately. Sir, but hours working will be the same only, right? But what is standard hours means? Time given to produce. If it is for labor, if it is for variable overhead, or if it is for fixed overhead, standard hours will be the same. Clear? What is actual hours means? Time taken by the actual time taken to produce actual output. For those actual hours, we will pay labor wages. For the same hours, we absorb overheads, right? So standard hours and actual hours will straight away we can take it from labor. But overhead rate, there will be a separate one. Clear? Understood? Okay. Then this variable overhead cost variance is again divided into two. Variable overhead, we won't call it as a rate, instead as it is overhead. We are not going, it is not a person. Wage means it is the rate per hour what we are paying to labor, as it is not a person, it is expenditure. Kharchu. Understood, right? So whenever I say, when I pay wages to a labor, I say that how much expense I paid it. How much is the expense I incurred towards wages. Understood, right? So that is the reason why there I have used rate, but here for overheads, how much is the expenditure we spent? Enta kharchu ayindi. Clear? So it is variable overhead expenditure variance. And hours difference, here also there will be same. Variable overhead efficiency variance. Why it is efficiency? Because as it is variable one, if labor works fastly, overhead also you are going to save it. If labor is taking lot of time, more number of working hours, that also we are supposed to pay extra expenses. See, overhead in the sense indirect expenses, right? So indirect expenses, longer hours, more electricity bill. If he is working for longer hours, factory has to open for longer period. If factory is working for longer period, definitely overheads also will incur for a long period. Yes or no? So that is the reason why here it is called as efficiency only, because SH minus AH depends on labor only. So here whatever the SH minus AH we take, that is same as this only. That is same as this only. Understood? So that we call it as efficiency only. Efficiency of the labor causes more overhead or less overhead. So that is the reason it is efficiency only. Into, here it is standard rate. Here it has to be standard rate minus actual rate into actual hours. Now, if only quantity information is given, comma, then use material formula from variable overhead for variable overheads. Now we have used labor formulas, right? All the three are labor formulas only, but if they give quantities information, use material formulas, but they are not giving, just in case. Now if both quantity and hours info is given, then convert all values to hours and use labor formulas. Clear? So when both is given, then convert it. Sir, how to convert it? Sometimes they may say 1 unit variable overhead is 20 rupees. 1 unit variable overhead is 20 rupees. Somewhere in the line they may say is that each unit takes 2 hours. Each unit takes, or standard time given for 1 unit is 2 hours. For 1 unit, if you are paying standard payment of 20 rupees, and if the same unit takes 2 hours, it means this 20 rupees is the payment for 2 hours. Then how much is per hour? 10 rupees, right? That's what standard rate is 10. Though they give per unit, or they may say that in each hour we can produce 2 units. If they given like this, in 1 hour we can produce 2 units. It means that for 1 hour I don't know how much, but in this hour I am producing 2 units, and 2 units cost is 40 rupees. It means 1 hour cost is 40 rupees. 1 unit 20 rupees they given. In 1 hour we produce 2 units. What is the cost of 2 units? 40 rupees, because 1 hour is equal to 2 units, right? 1 hour is equal to 2 units. So 2 units cost is 40, so 1 hour cost is 40. That is how to convert. Or if they give 1 unit is equal to 20 rupees and each unit takes 2 hours. Each unit taking 2 hours. It means 1 unit is equal to 2 hours. Unit cost is 20. 2 hours cost is 20. 1 hour cost is 10. But in the same, if they have given, in 1 hour we produce 2 units. It means 1 hour is equal to 2 units. Each unit cost 20, 2 units cost is 40. It means 1 hour is 40. Understood how to convert also? Easy. Just you write the statements like 1 unit how much, 1 hour is equal to how many units, or 1 unit is equal to how many hours, then you will get it. If you learn the formula, there is a formula for this conversion also, but I don't want to mention you that formula. Then there is a high chance of forgetting that formula. You may confuse when hours are more and units are less, or units are less, hours are more. If something they give likewise, you will get confused. But if you write like this, 1 unit 20, 2 hours is equal to 1 unit, or 1 hour is equal to 2 units. However they give in question, just just note it down on paper, so then you can get it very easily. Understood? Okay. Now see this fifth sum. Following is the information of GM Limited. Budgeted production is 6,000 units. Budgeted variable overhead is 1,20,000. What is standard variable cost, variable overhead per unit? 1,20,000 divided by 60,000, which is 20 rupees. So per unit it is 20. What? So 6,000. So it has to be okay, sorry, anyhow 20 only. Clear? Then what they given, sir? Standard time for 1 unit is 2 hours. It means what? In bracket, 1 unit is equal to 2 hours. What does it mean? 1 unit payment is 20, they given, right? That is equal to 2 hours payment. Just write like this, 1 unit is equal to 2 hours. What did they said? Standard time for 1 unit is equal to 2 hours. it means 1 unit is equal to 2 hours, and per unit, for 1 unit you are paying 20. It means for 2 hours also it has to be 20. Then what should be standard overhead per hour? That has to be 20 by 2, which is 10, and this is SR. Clear? What did, so we got SR. Then actual production is 5900. What is SH? SH is always calculated per actual output. Actual output is 5900 into, as per standard, how many hours per unit? 2 hours. Then it has to be 5900 into 2. The standard hours is always calculated for actual production, right? Actual production is 5900 units, and as per standard only, for each unit 2 hours it has to take it. So 5900 into 2. Clear? So how much it will be? 11,800. Then what about actual hours? Actual hours is 11,600. Actual rate, the given total overhead is 1,22,000. Yeah. Then it has to be 1,22,000 divided by 11,600 has to be the actual rate. Continuous. Is it coming continuous or it is closing? Continuous. It is coming. So just leave it. Do not write an answer. But when you are applying in question, I mean in formulas, it will automatically get cancelled and you will get the absolute answer. Let us check it. What is cost variance? Standard hours into standard rate minus actual hours into actual rate. It is equal to 11,800 into 10 minus 11,600 into 1,22,000 divided by 11,600. That is equal to 1,18,000 minus 1,22,000, 4,000 adverse. Clear? Next, variable overhead expenditure variance should be equal to, what will be the expenditure variance? Standard rate minus actual rate into actual hours. That is equal to 11,600 into standard rate is standard rate per unit 10 minus actual rate is 1,22,000 divided by 11,600. That is nothing but 1,16,000 minus 1,22,000. Again, see, it is getting cancelled. If you take in points, then you might not get absolute answers. So whenever in standard costing, whenever you're calculating per hour or per unit, if you are getting in points, just leave it. Just take the same values and apply in formulas. That get cancelled and you are going to get absolute values. So how much it will be? 6,000 adverse. Next, variable overhead efficiency variance should be equal to standard rate into standard hours minus actual hours, which is equal to 10 into standard hours is 11,800, actual hours is 11,600. So 2,000 favorable. So 2,000 favorable, 6,000 adverse. It has to be 4,000 adverse. So it got matched. Understood? That's about variable overhead variances. It will be very simple. Now, just it's a conversion part only. Conversion part also it should be very simple if you write like this. Never learn a formula. Just you make it equal. 1 unit is equal to 2 hours. Or they may say sometimes 1 hour is equal to 2 units. Then 2 units payment is 40 rupees. So 1 hour is equal to 40. Likewise, just to note it down like this, then you are going to get a conversion. Even when per unit, ignore it. SR has to be per hour only, because you have to use hours table only. Hours formulas only we are supposed to use it. So that rate also have to calculate per hour. Clear? And units they are not going to give you anyhow, leave it. Definitely they're going to give it hours, or if sometimes they may not give hours information directly, convert it, get it value and apply it in formulas. Clear? Okay. And last one, okay, not last one, sales variance are there, and fixed overhead variances. Listen, most of the people told me, whoever is asked me revision classes like marathon class about standard, they are facing problem with fixed overhead variances. But trust me, out of all the variances, fixed overhead variance is the easiest one. If you know overheads chapter properly. Got it? So for 2 minutes, I will revise overheads chapter. Then I will apply the same concepts for overhead variances. Clear? Okay. Sir, listen properly. Sir, at the beginning of the period, we should ascertain the cost per unit. Now, first thing, what is the objective of preparing cost? What is costing? What is an objective of costing? Why we are learning costing? See, the main agenda of cost manager has to be two things: cost control and cost reduction. And don't tell sir cost accounting we should do, because that is not public statements. There are internal statements only. By using those cost statements like MIS reports and all, we should control the cost. That is the main agenda. Reduce the cost. That is why they are paying money to you. Why one company is paying money to the cost accountants? Okay, nowadays there is in India they released one rule that every company has to do some cost audit if the turnover goes beyond this. So apart from that, why do you think a company, a manufacturing unit will hire a cost accountant? To save cost, to reduce the cost. That is the main agenda for us. But to reduce or control the cost, we should know how much is the cost we are incurring first of all. Without knowing how much we are incurring, how can we reduce the cost? Because I should identify whether there is a scope of reducing it or not, right? To identify the scope, definitely I should ascertain the cost. It means that I should ascertain the cost. So when should I ascertain the cost? Not at the end of the period. If I ascertain the cost at the end of the period, after period is completed, how can you control and reduce the cost? Sir, if I ascertain at the end of the period, I can reduce in the next period. Sir, next period scenarios will get changes. Scenarios will get changed. Next period situation gets changed. Sir, now for 2 months there is lockout happening. In these 2 months, there is scarcity of one raw material, I am not going to get it, or else there is some war happening outside. I am producing one product where I have to get raw material from that particular country. I am getting very less amount of raw material, and with that raw material, what should be the optimal production I should plan for? When should I plan that? After completion of the period or before the period itself? At this situation, I should plan for that. After the end of the period, if I ascertain, there is no use, because in the next period my situation gets changes. In the next period there will be amendments of raw material might be. Now there is a scarcity. Under current situation, for this period, I have to save the cost or control the cost, reduce the cost. To do that, I have to ascertain the cost at the beginning of the period only. But sir, while ascertaining at the beginning of the period, prime cost, I will get to know how much I am incurring, because prime cost is a direct cost which can be attributable to a finished product. But overheads, definitely I cannot ascertain at the beginning of the period. So what they do to ascertain the cost for overheads, they will prepare a budget. So they will note it down all the overheads what they might incur based on past experience, and they will write all the values. They will write like rent, how much, insurance, how much, or depreciation, how much, canteen charges, how much, store charges, how much, repairs and maintenance, how much. Likewise, for all the indirect expenses, they're going to write the list down of all the expenses. Then they distribute those expenses to various departments in the factory. Prime cost in the sense, I can say how much is the cost which belongs to which department. But overheads I cannot say, right? Indirect expense I cannot say. That is why it is called as indirect. Direct means a cost which can be ascertained to the finished product or a cost object. Indirect means a price of a cost which cannot be allocated or cannot be ascertained to cost object or a product in an economically feasible way. That is the reason why they call it as indirect. It means indirects I cannot ascertain and distribute it. So what I am doing, I am noting down all the list of overheads and doing primary distribution and secondary distribution. In primary distribution, what I do, all the list of expenses, list of overheads, by taking one suitable base, I am going to distribute for various departments. Rent, floor area. Depreciation of machinery, value of machinery. Depreciation of factory building, again floor area. Insurance on machinery, value of machinery. Insurance on building, again floor area. Power charges, horsepower into machine hours. Lightning charges, light points. If light points not available, floor area. Got canteen charges, number of employees. So likewise, in the list of overheads, whatever we are having, we are going to distribute to various departments. Understood, right? And in the same building, we might have 3 production departments and 2 service departments. There will be some place allocated to repairs and maintenance department also. So let us say there is a repairs and maintenance department of 5 people. Let us say if there is a company of like ITC, there are many machineries are there. Understood? If you buy a washing machine, will you hire repairs and maintenance on one repair maintenance person? Let us say at home, you are using washing machine, TV, refrigerator, many appliances you are finding out. Are you hiring one repairs and maintenance person and giving one room and asking him, will you ask him to repair whenever it get repaired? No, because my usage is less. Got it right? But in big companies, as they're having many machineries, they won't call repairs and maintenance people whenever they do require. They won't take service from outside. They will have a team, and the team will have in the same building. They won't tell them that, okay, sir, you 5 people, stay anywhere, wherever you have. So there is one tree, under that there is one table, go and sit there. Whenever we get repaired, we'll ask him to come. No, definitely they will have one room, one cabin. They will have some chairs. It means the floor area and the building is distributed. So in the same building, some area is allocated to repairs and maintenance team. So in that room, they will have all the tools which are used for repairs and maintenance. They will keep their tools and they will have some area to sit. They got it right. Understood what I am saying? It means the building is occupied by some floor area is occupied by repairs and maintenance team, and stores also, some floor area is occupied by the stores. Understood, right? So production departments are using indirect expense as well as service departments. So they do primary distribution, and then after doing primary distribution, production department overheads will be bear by that particular customers. But who has to bear the service departments? They won't have any customers, right? Why do we have such service departments? To make production department run smoothly? Yes or no? We are going to redistribute again, which is called a secondary distribution. Understood? So up to this, you already learned it in inter. Clear? Primary distribution and secondary distribution you already done. After secondary distribution, what happens? Let's say if we are having 3 production departments, P1, P2, P3. For P1, I'm going to get total overhead. For P2, I am going to get total overhead. For P3 also, I am going to get total overhead. Now, under P1, if I am producing 3 products ABC, then these overhead I should distribute per unit of ABC. Then only I can ascertain cost per unit, right? And that process is called as absorption of overheads. That process is called as absorption of overheads. Now, from now, listen very carefully. Is this actual overhead or budgeted one? From primary distribution and secondary distribution, for P1, I got some overhead. Is that actual or budget? Budgeted only. Actual side, I don't know at the beginning, right? That's what I told you. List down all the overheads and based on past experience, write the expected value and distribute those expected values for various departments and do primary and secondary distribution with budgeted values only. And this is nothing but budgeted overhead. And these budgeted overhead I should distribute for the units of ABC. Clear? Now at the beginning of the period, will you get to know how many units of ABC are manufacturing? But at the beginning of the period only, I should ascertain the cost per unit. But at the beginning of the period, will you get to know How many units of A, how many units of B, and how many units of C you are going to manufacture? Exactly, will you get to know? Definitely no. But will I prepare a budget based on my sales forecast? Based on my sales forecast, I'll say that I'll prepare 10,000 units of A. I'll produce 15,000 units of B, and I will produce 5,000 units of C. And based on that budgets only, I'm going to distribute the overhead. That is the reason we call it as budgeted overhead rate is equal to budgeted overhead divided by budgeted base. Remember this formula, everyone? Remember or not? Budgeted overhead rate is equal to budgeted overhead divided by budgeted base. When do we calculate this rate? At the beginning of the period only. Why do I calculate this rate? To apply for various units. To apply for various units to ascertain the cost per unit. Clear? Sir, at least if you have not remembered all these things, just remember one thing. Prime cost I will get to know at the beginning. But indirect expenses, definitely we cannot find it out how much is cost per unit at the beginning. But at least I have to ascertain the cost per unit. At least to fix the selling price, I have to know cost per unit, right? Let us say, by the time of April 15, you have manufactured 2,000 units. Let's say you got one of the customer. Sir, I want 500 units. Will you say that, sir, I know how much is the prime cost I incurred for these 2,000 units? I will get to know how much of the overhead which I incurred for these 2,000 units at the end of the year only. Please come after 11 months and 15 days. I can ascertain the selling price and I will sell it. Will you ask your customer to come after 11 months and 15 days? Definitely no, right? Then how do you ascertain the selling price? At least based on estimations, how much might be the overhead based on my past experience, based on budgets, I'm going to calculate per unit and I'm going to apply for actual production and I'm going to fix the selling price. Yes or no? Understood or not? Sir, you forgot overheads chapter, whole chapter, but try to just think logically. When you produce one product, let us say you are producing and selling this pen. In the first 15 days, you manufactured 2,000 pens. 2,000 pens. And the prime cost what incurred for these pens, you already know it. Because it's a variable cost at the beginning of, during manufacturing itself, we'll get to know it. But how much of the overhead you incurred for this pen, you will get to know at the end of the period only. Now you got a customer asking for selling this pen. As you don't know how much is the original overhead you incurred, will you stop selling? Or will you ask him to come after 11 months and 15 days? Definitely no, right? Then how do I ascertain the selling price? At least based on my past experience, I will calculate overhead per pen. I will add that cost to this one, plus my margin, and I'm going to fix the selling price and sell it. Yes or no? Understood or not? So that's what we are going to do at the beginning. At the beginning of the period, we calculate budgeted rate. Let us say I got budgeted rate per unit is 10 rupees. 10 rupees per unit based on budget output. Based on budget output. Now, in the first batch, I produced 5,000 units. Then how much I charge overhead for this batch? 5,000 into 10. In the second batch, I produced 7,000 units. How much of overhead I will charge to second batch? 7,000 into 10. Why do you calculate a rate? To apply that and prepare a cost sheet only, right? I will apply that rate and I will prepare a cost sheet. In the third batch, you produce 3,000 units. Then how much overhead you take to that cost sheet? 3,000 into 10. Understood? Clear? It means rate you calculate for budget, but when you are applying to the cost sheet, you will apply for actual units. In that particular batch, how many of the units you manufactured For every unit 10 rupee, you are going to apply it. It means by the end of the period, what will be your applied overhead? Applied overhead in the sense absorbed overhead. What will be absorbed overhead? Actual units in the whole year into 10? Yes or no? And this is the one which you have taken to the cost sheet. Understood? Clear or not? At the beginning of the period, you will prepare a budget and you will find out the rate. The same rate you will apply for actuals during preparation of cost sheet. So during preparation of first batch cost sheet, in this batch, I know how many number of units I produced, right? Then why should I use budgeted output? I already got to know how much actual output, right? Understood? Sir, I should assert one thing. I should ascertain the selling price just before sending goods to the godown, not just even before manufacturing. Understood? Sir, my goal is not to ascertain the selling price before manufacturing itself. I will fix the selling price just before sending goods to the godown, sending goods to the sales department, because I have to place MRP there, right? Clear? Just before sending means I already got to know how many units I manufactured in this batch, right? It means I will apply the trade for actuals only. I will apply the trade for actuals only. And that will be absorbed overhead based on actual output using budgeted rate. That's what standard overhead. What is standard means? Budgeted cost for actual output. Budgeted cost for actual output. Now these budgeted overhead, whichever we got from primary and secondary distribution, is budgeted overhead. Clear? At the beginning of the period, I will ascertain budgeted overhead by doing primary distribution and secondary distribution for one department. That is budgeted overhead. What is actual overhead? Sorry, what is absorbed overhead? That is the overhead which we send to the cost sheet. That is the overhead we recovered from customer. Sending to the cost sheet in the sense recovered from customer, right? Understood or not? So the recovered from customer is nothing but standard overhead, because that is budgeted overhead for actual output. Budgeted overhead for actual output. That is what absorbed overhead. Clear? Now at the end of the period, I will get to know how much is the actual overhead I incurred. At the end of the period, will I get to know how much actual overhead I incurred? Yes, that will be actual overhead at the end of the period, based on, by adding all the overheads which I actually paid from my pocket, I will get to know how much is actual overhead. Clear? There are three things now. So let us say budgeted overhead is 10 lakhs and budgeted base is 1 lakh. How much is per unit? 10 rupees. And budgeted overhead is 10 lakhs. Then what is actual overhead, absorbed overhead? If we produce 90,000 units, it is 90,000 into 10. If we produce 1,10,000 units, it is 1,10,000 into 10. Yes, sir. Understood? Absorbed in the sense for actual output, budgeted only, right? Then the difference between standard and budget is arised because of change in volume. The difference between standard and budget is arised because of change in volume only, because rate is not changing. Rate is not changing. The difference between budget and standard is there because of change in volume. You calculated budgeted rate for 1 lakh units. If you actually produce 90,000 units, your absorbed will be 90,000 into 10, 9 lakhs. There is a difference of 1 lakh because 10,000 units lower you produce 10,000 into 10. If you produce additional 10,000 units, then 10,000 into 10 extra, 11 lakhs you are going to get it. Clear? Understood? Then what is the cost variance? Cost in the sense, how much I incurred, how much I collected. Understood, right? How much I incurred? Actual overhead.
How much I collected? Standard overhead. Cost is nothing but standard minus actual only, right? Cost variance. How much is the cost variance? How much I incurred and how much I collected from customers. I incurred actual overhead and I collected from customer by sending to the, which one I send it to the cost sheet? Standard overhead only, right? That is called as cost variance. Clear? Now, let us draw a table, small table. You can understand fixed overhead variances. Sir, even if you have not understood what I have told now, because that has, you have to carry the concept from inter. In marathon, definitely we cannot cover all those, right? Even if you have not recovered, I will tell you a shortcut. Use this shortcut, at least for examination purpose, you'll get full marks. Clear? Now, do one thing. You take, see, only for fixed alone, you take three things: budget, actual, standard. Sir, why sir three things? For variable cost, sir, anyhow, it will be constant per unit. It will be incurred based on the output, based on the volume what I produce. But fixed cost is constant in a period, irrespective of the volume you produce. Understood, right? So that when I'm comparing how much budget I prepared, how much actual I incurred, the difference between those two is the reason because of change in volume and all. So that there will be three things: budget hours, budget rate or standard rate, BOH, actual hours, actual overhead, standard hours, budget rate or standard rate, SOH. Use this table, you'll get easily. Clear? What is budget hours means? If you understand the meanings of all these terms, we can apply the values properly. What is budgeted hours? Standard time for budgeted volume. Standard time for budgeted volume. See, at the beginning of the period, I will tell that to produce 1 unit, you have to take 5 hours. Standards, when do I give? At the beginning, I will give standards. After giving standards only, I prepare budgets, right? Standards always to produce 1 unit. How much quantity, how much is rate, how many hours, what should be the rate per hour. Standards I fix at the beginning. Budget hours in the sense, as per standard, to produce budgeted volume, how many hours we do require. That is BH. What is AH? To produce actual output, how many hours actually they took. They will give in question. What is SH? As per standard, to produce actual output, how many hours it has to be taken. Clear? Then what is budget rate or standard rate means? Rate means it will be the same, right? Rate vachesarki for budget and standard it will be the same. Why? Because that will be fixed at the beginning of the period only. For 1 hour, this is the rate we are supposed to pay it. That is standard, that will be fixed at the beginning only. Understood? Because what is the difference between BH and AH? BH is for budget output, SH is for actual output, but both has to take standard time only, right? Both has to take based on standards only. So that standard hours is nothing but the standard which I fixed at the beginning of the period. That is also they're going to give in question. If not given also, we can calculate it easily. Listen. That's nothing but BOH by BH or SOH by SH. Rate has to be the same for budget or standards. Rate should not be different because that will be fixed at the beginning of the period. Sir, in today's class, at the beginning, first thing we discuss that only. Rates we are going to fix at the beginning. Even if it is budget or standard. What are standards? At the end of the period, we are going to recreate the budget for actual output by using the standards only, right? SOH in the sense, based on budgets only, I'm supposed to create only, right? Standards means. Yes or no? Okay. Now, what is the reason why there is difference between BOH and SOH? Just now we discussed. Volume should be the reason. BOH at the beginning of the period we create for budget output. SOH the same rate I'm supposed to use, but for actual output. It means in both the cases rate is same, but here there is budgeted volume and here it is actual volume, and that is nothing but budgeted volume, difference between budgeted volume and actual volume. Yes or no? So that has to be volume variance. Now standard overhead is nothing but absorbed overhead. Standard overheads means absorbed overhead which is collected from the customer. SOH is the one which collected from customer. AH is the one which I incurred. Understood, right? Difference between those two is nothing but cost which I spent from my pocket. Sir, I collected 9 lakhs, I incurred 1 lakh. Then my additional cost is 1 lakh, right? Just now we discussed that SOH is nothing but the amount which we collected from the customer. AOH is the amount which I actually incurred. So then difference between those two has to be the additional cost what I incurred. So that has to be cost variance. Even if you are not understanding, after the end you are going to see the table. By just remember, we can memorize the table and we can write it. Now, sir, what is the difference between BOH and AOH? How much I asked you to spend, how much you incurred. At the beginning of the period, I given a budget. This is the amount you are supposed to incur for fixed overhead. AOH is the amount what you incurred. Ent extra kharchu bettaru. How much extra you spend. Understood, right? So they are talking about the spending thing. So it is expenditure variance. Clear? Now remember, all the arrows will be upward, only expenditure variance will be downward. Now, why do you think there is change in volume? I told to produce 10,000 units, but you produced only 8,000 units. What can be the reason? One reason is working slowly. Working slowly, that is called as efficiency, or else working for lower time. So let us say I asked you to prepare 10 questions. I asked you to prepare 10 questions, but you prepared only 8 questions. What can be the reason? You studied slowly. So I told you to spend 3 hours in study hours and complete 10 questions. You spend 3 hours, but you're able to cover only 8 questions. It means your efficiency is not good. You are a slow worker, slow learner. I told you to sit for 3 hours, but after 2 hours, no, I cannot. Maximum 2 hours is, I cannot sit for more time. But within 2 hours, you completed 8 questions and you went outside. It means your efficiency is good actually, because each question you are supposed to take 3 point something hours, 3.3 hours, 10 questions 3 hours. Sorry. So 10 questions 3 hours, 3 by 10. Understood, right? Okay. But you were able to complete 8 questions in 2 hours only. It means you worked, or it means you studied fastly, but still you didn't reach the budget. Why didn't you reach the budget? Because you are not able to sit for long period, which is called as capacity. I have no capacity to study for long period. I cannot say efficiency. Efficiency means speed, fastness of the work. But capacity means how long you can work. If I say if a person is having more capacity, opika, understood, right? It does not mean that he can work fastly, right? ఓపిక ఉందంటే ఫాస్ట్గా పని చేయగలడనా, ఎక్కువసేపు పని చేయగలడనా? దట్ ఈస్ వాట్ కెపాసిటీ. Understood, right? If he can work for long period with patience, then he is said to having more capacity. If he can work faster, he is said to have more efficiency. Now, if my volume is decreasing, it can be, if you are having more capacity but low efficiency, still it will impact. If you are having more efficiency but lower capacity, still it will impact your volume. Understood, right? So your volume is impacted by capacity and efficiency. Now what is difference between AH and SH? SH means time given for the work what you did. AH means time taken for the work what you did. Now these two talks about the speedness of the work. For the same work, how many hours you took, how many hours I have given. Clear? So this into SR has to be efficiency variance. Clear? Then, sir, forget about the volume. How many hours I told you to work for BH? Volume pakkana pettandi. Forget about the volume. How many hours I told to work for BH? At the beginning of the period, I'll say, sir, if my budget hours is 10,000 hours, it means I will arrange all the resources for 10,000 hours. Sir, I planned to use it for 10, I plan to work for 10,000 hours means I will create all the resources in such a way that worker can work for 10,000 hours, right? But they are working for only 8,000 hours. Forget about the volume, what they are worked for. Now, the difference between those two has to be capacity. And capacity plus efficiency has to be equal to volume. Now, you check that all the arrow marks are upside, only expenditure variance is downside. If an arrow is going from SOH to AOH, it means SOH minus AOH, it means. Understood? Huh? So if you can at least remember this diagram, fixed overhead variances will be done. It will be very simple actually. Just remember the diagram. You can, if you know meaning of BH, AH and SH, you can fill those values easily, and by applying those arrow marks, you can get the answers. Understood? Clear? But there is one small catch here. Sir, I told to work for, I'm opening office. When I'm creating a budget, I created a budget for 25 days, work for 8 hours, total 10 workers are there. Then what are budget hours? 2000 hours. What are budget hours? 2000 hours. But you worked for only 1900 hours. Can I say your capacity is negative? Yes or no? Sir, I told to work for 2000 hours, but you are working for only 900 hours, 1900 hours. I cannot say that whether you did fast or slow, but I can say that your capacity is lower. Agree? Sir, capacity means not able to work for more time. Not able to work for more time. I have told you to work for 2000 hours, but you are working for only 1900 hours. It means your efficiency, your capacity is lower, right? So they called you and they're asking you why you are not able to work for long period. Why your capacity is lower? They're questioning you. Then you may say that, sir, how many days you are supposed to open a factory? 25 days. Now, on one fine morning, you called and says that today factory is not going to be opened because my first wife birthday. And you invited us to the birthday party. As you invited us on a working day, you paid me the salary. You paid me salary because I'm not taking the leave. You are calling me for the function. One day done. Got it right? In the same month, unexpectedly, you got second wife anniversary. On that day also, you closed the factory and you called for the function. And second day also, you closed the factory. Then how can you compare 2000 hours with 1900 hours? Actually, how many days you opened the factory? If you might have opened the 2 days also, I might have went to a factory, I might have worked for those 2 days also. Now how many days they worked? 23 days. As per budget, for 23 days, how many hours I am supposed to work? How much it will be? 1840 hours. As you called me for birthday party as well as this anniversary, to meet the customer's demand, I extended my working hours in the late evenings and I worked for 1900 hours. Now you are calling me and asking me that your capacity is adverse. Can you say that? No. So whenever in question, if budgeted working days and actual working days are not equal, then capacity variance should not be calculated with BH. Instead, it should be calculated with RBH, revised budgeted hours. So what are revised budgeted hours? Simple. BH by budgeted working days into actual working days. So for 25 days, if it is 2000 hours, for 23 days, how many hours? Like this, 2000 divided by 25 into 23. Then also you are going to get RBH. Understood? Then whenever there is RBH, then into SR has to be capacity. Now when this is capacity, when budgeted working days are equal to actual working days, I have to use this formula. And when should I use this formula? When budgeted working days is not equal to actual working days. Then your production, your volume is impacted by 3 reasons now. What are those 3 reasons? Efficiency, capacity, as well as you worked for low number of days, it is called as calendar variance. Difference between those two into SR will be calendar variance. Understood? Now cost variance is divided into 2. One is volume expenditure, and the volume variance is divided into 3. Efficiency, capacity, calendar. Clear? Now once again I will revise the table quickly. Let us see here. Draw this BH, BRR, BH, BOH, AH, AOH, SH, BRR, SR, SOH. SOH minus AOH is cost. SOH minus BOH is volume. And SH minus AH into SR is efficiency. AH minus BH is capacity. And if working days are different, then AH minus RBH will be capacity. RBH minus BH will be calendar. See arrow marks here to here, here to here, here to here. Understood the arrow marks, right? Here to here, here to here, here to here, and wherever it's stopping, from that it is going. Clear? And cost variance upward, volume variance also upward. The only one which is downward is expenditure variance. Clear? And if just remember this diagram, fixed overhead variances will be the easiest one. Clear? Let's solve problems based on that so that you can understand how easy it is. Understood about fixed overhead variances, right? Listen, application also definitely will feel easy. Clear? Okay. See problem number 6. A company has a normal capacity of 100 machines working 8 hours per day, 25 days in a month. So first thing you have to do it is you have to make a table. BH, BR or SR, BOH, AH, AOH, SH, BR or SR, SOH. Now, a company has a normal capacity of 100 machines working 8 hours per day, 25 days in 25 days. That is normal, budgeted. So as per budget, what should be hours? 100 missions working for 25 days, 8 hours each day. 20,000 hours. Okay, next. The budgeted fixed overhead in a month is 1,50,000. Then what has to be budget rate or standard rate per hour? I got budget hours, I got total cost. Hours is there, total cost is there. Per hour it has to be divided by number of hours only. How much it will be? 7. If this is 7.5, this also has to be 7.5. Okay, then next. The standard time required to manufacture 1 unit of a product is 4 hours. As per standard, to produce 1 unit, you should take 4 hours. In a particular month, the company working for actual 24 days into 750 mission hours per day into 750. How much it will be? 18,000 hours. And produced 4,500. What is SH? SH will be always for actual production. So 4,500 into 4. If you understand what is individual meanings, you can fill these statements very easily. Standard hours is budgeted time or standard time for actual output. Actual output is given as 4,500 and they told that to produce each unit as per standard, we have to take 4 hours. Actual hours they already given by saying that 750 mission hours is working per day and 24 days we are working for. Clear? Okay. And this has to be 18,000. It means our efficiency variance is 0. I have given 18,000 hours to work for 4,500 units. You also taken 18,000 hours. So your speed is same. However, I expected you are working with the same speed. So efficiency is 0. Then how much this has to be? 18,000 into 7.5. 1,35,000. Then what is AOH? Actual fixed overhead incurred is 1,45,000. See how easy it is to fill. Clear? Now this minus this, how much? 10,000 adverse. This has to be cost variance. Next, this minus this, 5,000 favorable, which is expenditure variance. Now this minus this, 15,000 adverse. That has to be volume. Check volume plus expenditure is cost. 15,000 adverse plus 5,000 favorable. It has to be 10,000 adverse. So matching. Now volume variance is because of 0. Efficiency is 0. Sir, RBH is there in this question because working days are different. This is 24 days and budgeted for 25 days. Then what should be RBH? 20,000 divided by 25 into 24. For 25 days as per budget, if you have to work for 20,000 hours, for 24 days, how many hours? 19,200. Then these minus this, I am supposed to take it as capacity into SR into 7.5 because difference will be hours. I wanted amount. How much? 9,000 adverse. 9,000 adverse. Now these minus this has to be into 7.5. This has to be into 7.5. If you can remember, volume, subcategories of volume to take standard hour only from material, labor, variable overheads. Every time we have seen subcategories will take standard rate only. Understood, right? That is the reason I am multiplying with standard rate. This has to be calendar. How much is calendar? 6,000 adverse. 6,000 adverse plus 9,000 adverse plus 0. 15,000 adverse, right? Which is matching with volume. So that simple it is fixed overhead variances. Know what is BH, know what is AH, know what is SH. That's it. If you know them, you can just apply those values and just remember those arrow marks and you can fill it. Sir, but when you are writing in exam, whatever the new findings you are finding, don't write this table. You can write it on a question paper or you can write it on rough. Let's say how to approach the same question in exam. First, they have given this one, right? Budgeted hours BH is equal to 100 into 25 into 8, which is equal to 20,000. Next, budgeted overhead BOH is equal to 1,50,000 given, and BR is equal to BOH by BH, that is equal to 1 lakh. It means whatever we are filling on the table, whatever the calculation you are doing, you have to write it like this, step by step. And finally, when you are writing variances, then how do we write? Fixed overhead cost variance is equal to SOH minus AOH, which is 1,35,000 minus 1,45,000, that is equal to 10,000 adverse. Likewise, fixed overhead capacity variance is equal to SR into AH minus RBH. Same formula, is there, right? There itself, AH minus RBH into SR, na? So that is equal to 7.5 into 18,000 minus 19,200. 9,000 adverse. This is how we have to represent in exam. What it write? You can write this table in rough paper or in the main answer sheet also, but definitely you have to represent like this. In the table, if you are representing cost and all these things, they won't verify that. They will strike it off. This is how we have to represent it. But definitely fixed overhead variance has to be very, very easy for exam purpose, even though if you are not aware of the concept, by applying those tables and by knowing the meaning of what is AH, what is RBH, what is SH, that's fine. Clear? Clear, everyone? Let us solve one last question for fixed overhead variance as well as variable overhead. It's variable overhead from one question itself. So read the question once. Done? Okay. See here, the given standard overhead absorption rate. While we are absorbing overhead, we absorb both variable and fixed combinedly. In absorption costing, if we can remember, in inter, we never segregate variable and fixed. We note it down, all the overheads, and we distribute in primary and secondary distribution. If they have given absorbed overhead, it is total. It includes both variable overhead as well as fixed overhead per unit. And per hour rate is equal to 4 rupees they are given. See here, 1 unit is equal to 20 and 1 hour is equal to 4 rupees. how many 4 rupees will become 20? 5 hours. It means that implies 1 unit is equal to 20 by 4, which is 5 hours. It is standard time per unit. See, for each unit I am paying 20 hours. For each hour I am paying 4 rupees. How many hours payment will become 20? 5 hours payment will become 20. It means indirectly in 5 hours we are making. So they told that as per standard, overhead should be each unit 20 rupees it should be, each hour 4 rupees it should be. Understood, right? If it is each hour 4 rupees, for 5 hours only it will be 20 rupees. It is indirectly they are saying that 1 unit time is 5 hours. Clear? That is the first thing you have to write it. Standard time per unit is equal to 20 by 4, which is equal to 5 hours. Clear? Then what? So we want 2 overheads. One is for variable overheads, what do I require? Standard hours, standard rate, actual hours, actual rate. So for fixed 2 overheads, what do I require? BH, BR or SR, BOH, AH, AOH, SH, BR or SR, SOH. Clear? Let's read the question and check it. Budgeted production is 12,000 units. Budgeted production is 12,000 units and standard time per unit is equal to 5 hours. And what should be standard hours? Sorry, budget hours. Budgeted production is 12,000. Budget hours is nothing but for budgeted output. Budgeted hours is budget output, which is 12,000 into 5. So how much it has to be? 60,000. Okay, then actual production is 15,560. Then what should be standard hours? 15,560 into 5. Standard hours is for actual output. Actual output is 15,560. So for 5 hours, how much it will be? 77,800. So this has to be 77,800. So standard hours, actual hours will be the same for labor, variable overhead or fixed overhead. That is the time what actually they are working for, or that is the time what actually we have given for. They won't change for labor separately, variable overhead separately and fixed overhead separately. Everything will be the same. Clear? SH and AH will not change for 3 different variances. All the variances will have the same hours. Okay. Next. Actual working hours is 74,000. So AH is 74,000. Okay. Next, actual overheads amounts to 2,95,000, out of which 62,500 are fixed. Then actual, this is 62,500. AR is out of 2,95,000. If 62,500 are fixed, remaining 2,95,000 minus 65,000 remaining has to be variable, and this has to be AR. Rate per hour. What is total cost divided by number of hours? Then it will be rate per hour. And what should be AR? Getting continuous? Just leave it. Leave it as 2,30,000 by 74,000. Understanding? Actual cost they given. For budget they given as 60. For fixed they have given as 62,500. It means remaining thing has to be variable. And already variable cost they given and hours already they given. Rate has to be cost by hours. Okay, then overheads are based on the following flexible budget. It means to find out SR in both variable and fixed, they have given us a flexible budget. So from flexible budget, whenever they give more than 2 volumes, then we can segregate semi-variable cost into variable and fixed. So segregation of semi-variable into variable and fixed. For that, you can take any two volumes, 8,000 units. Units cost for 8,000 units cost is 1,80,000. For 10,000 units, it has to be 2,10,000. See, it has both variable and fixed. It has both variable and fixed. Sir, with the increase in volume, do fixed cost increases? With the increase in volume, do fixed cost increases? Obviously no. It means whatever the cost increased has to be variable cost of additional units. Sir, variable cost units increases proportionately. If you produce 1 extra unit, you are going to incur variable cost of that extra units. If you are producing 2,000 extra units, you are going to incur additional variable cost for 2,000 units. And definitely you are not going to incur any additional fixed cost. It means whatever the additional cost you had incurred has to be variable cost of the 2,000 units. Agree for this? Sir, variable fixed cost will not increase with the change in volume. Variable cost increases with the change in volume proportionately. If you manufacture 100 extra units, you will incur variable cost of that 100 extra units. If you manufacture 2,000 extra units, you are going to incur variable cost for the 2,000 units. It means the additional cost has to be the variable cost for it. Therefore, variable cost per unit has to be 30,000 into 2,000, which is 15 rupees. Then what should be variable cost per hour? 15 by 5, because 1 unit is equal to 5 hours, right? 1 unit cost is equal to 5 hours cost. We already found it out, right? I want hours only, not units. So then variable cost per hour is equal to how much? 3 rupees. So variable cost is 3. Then how much should be the fixed cost? 4 minus 3, because they given standard rate per hour is 4 rupees. Per hour rate is given 4 rupees, right? Out of that 4 rupees, 3 rupees is variable, 1 rupee has to be fixed. Sir, నాకు strike అవ్వలేదు. Immediately I didn't get strike. Then at least we know how to find out fixed cost. Fixed cost is equal to total cost minus variable cost. At any level you can find out fixed cost, right? The total cost is 1,80,000 minus variable cost is 8,000 into 15. How much? 60,000. This is nothing but budgeted fixed cost. From budgets only we are calculating, right? Then budgeted has to be 60,000, and 60,000 by 60,000, 1 rupee anyhow. From the question already they given per hour 4 rupees. Variable we got 3. Straight away we can say 1 hour is fixed, 1 rupee is fixed. At least if you are not getting that point immediately to your mind, we already know from segregation we can find out fixed cost from budget. See, these all values are from flexible budget. It means these are budgets. Clear? So we got budgeted overhead as 60,000, and 60,000 by 60,000 only BR. BOH by BH only, right? BR means. If this is 1, this also has to be 1. This has to be 800. That's it. Now we can apply all the formulas. Clear? These kind of questions students are feeling very difficult. But if you really understood the logic, standard costing is one of the easiest chapter. Understood. Straight questions. What is SH? What? Just understand the meaning. What? Why we are preparing standard costing? At the beginning of the period, we prepare standard for every unit. To produce one unit, we prepare standard. With the same units, we prepare budget. With the same units, we recreate the budget at the end of the period for actual output to compare with actuals. If you just to know that particular point, it means in the notes, if you see, if you just to know this point, this whole point, if you know, your standard costing will be easy. Understood? Huh? Okay. Now, let us do sales variances. Sales variances, there will be two kind of variances. Sales total variances, sales margin variances. Clear? Let's try to understand the difference between those two. Reconciliations tomorrow I will do. Anpistundi. Got it? But sales variance is just reverse of materials. I note reconciliation if I take today, you cannot take it. Sales variance is easy only. Let's complete that and we can close for the day. Okay? And this should be as a revision. But most of the people are listening standard costing for the first time. As if it is first time. Why you are not able to concentrate for long period. But please practice it today itself. Definitely it will be easy. Revise the notes which I will share now after the class. Revise it, check the notes properly, understand the meanings, and do every sum in your book except reconciliations, as well as there is one concept called as planning variances and operational variances. It maximum takes 10 minutes or 15 minutes. Tomorrow I will take it. And reconciliations 1 hour, I will take it 1 hour. I'll make it reconciliation problems very simple by making you to understand the concept. If you practice it up to sales variances today. Clear? Okay. Sir, the first thing under sales variance, standard quantity is always equal to budgeted quantity only. In cost variances means standard quantity of materials is for actual production, but it is sales, no production here. I told you to sell 10,000 units, you sold 8,000 units. Standard quantity is 10, actual quantity is 8. Understood, right? So this is nothing but budgeted quantity to be sold. Understood, right? And budget price or standard price are equal. Anyhow, there also budget rate and standard rate are equal even for cost variances. This is nothing but budgeted selling price per unit. Clear? Now you write it. Sales total variance. What should be the formula? What is your total actual sales? Actual quantity into actual quantity sold into actual selling price minus standard quantity which I asked you to sell into standard selling price. I'm taking actuals minus standards, same materials formulas. But why I'm taking actuals minus standards? Because these are revenue variances. I should take actuals minus standards. All the formulas will be the same as materials. Now, these divide into two parts. Sales price variance, sales volume variance. Now, what should be the formula for price variance? SP minus, sorry, AP minus SP into AQ only. Here, AQ minus SQ into SP. Same formulas. Clear? Just actual minus standard, that's it. Now volume variance, two reasons. Sales mix variance. But here I should not call it as yield variance. I should not. Why? Because yield is productivity. When I am manufacturing, I should talk about productivity. So here it should be sales quantity variance, or we call it as sales sub-usage variance. We also call it as sub-usage variance or quantity, sub-volume variance, sorry, sub-volume variance or quantity. Here you should use volume, here you should use quantity. And same, tell me the formula. SP into same as material, right? In the place of SQ, I should take RSQ, right? Here in this formula, in the place of SQ, I should take RSQ. AQ minus RSQ. ఏం సార్ అసలు విన్నారా లేదా క్లాస్? ఏమన్నా అవసరం అయిందా మ్యారథాన్ క్లాస్ ఇది మీకు? నెక్స్ట్ సేల్స్ ప్రైస్ ఇంటూ RSQ minus SQ. Okay, fine. Understood? That about sales variances. Now let's go for sales margin variances. Sir, sales margin variances. Here, sales variances talks about how much is the variance in sale value. Let's say I told you to sell for 12 lakh rupees, you sold it for 10 lakh rupees. That is the sales variance. Sales margin variance in the sense, because of change in sales quantity, how much is the profit is impacted by. Understood, right? At 12 lakh sales, we should get 10,000 profit. At 10 lakh sales, you got 11 lakh profit. How much is the change in profit? 1,000 profit, right? Sir, margin variances means profit variance. Because of change in sales quantity, how much sales value is changing, that is sales variance. How much profit is changing, that is margin variance. It means, what is standard profit means? Standard quantity into standard profit per unit. What is actual profit? Actual quantity into actual profit per unit. Yes or no? In the place of prices, I have to take profits. Margins, I am supposed to take it. Clear? So sales margin total variance. Now what should be the formula? Actual quantity into actual margin minus standard quantity into standard margin per unit. In the place of prices, I take margins, that's it. Same formulas. Clear? Now, so this has to be sales margin price variance. Sales margin volume variance. That has to be actual margin minus standard margin into actual quantity. Now this has to be actual quantity minus standard quantity into standard margin. Same metal formulas, right? Now this margin again, volume is because of two reasons. Margin mix variance, margin quantity variance. So tell me, what should be the formula? Standard margin into AQ minus RSQ. standard margin into RSQ minus SQ. Here if you are getting AQ, here it has to be SQ. Clear? Now sir, what is standard margin is equal to? Standard selling price per unit minus standard cost per unit. Clear? Then what should be actual margin is equal to actual selling price per unit minus standard cost per unit. Sir, why? Actual margin is actual selling price minus actual profit, right? If that is so, this profit is the variance because of sales, how much profit is impacting by, because of cost, how much profit is impacting by. As I am already showing, because of cost, how much my profit is impacting by separately, you should not impact your cost in sales variances or else sales margin variances. Understood? Already we are fixing that as per standard you are going to incur 5 rupees cost. If your actual selling price is 10, your margin is, standard margin is, sorry, if your standard selling price is 10, your standard margin is 5. If your actual selling price is 12, your margin is 7. In both the cases, I am supposed to deduct with standard cost per unit only. If you take actual cost per unit, then your total profit variance will get there itself. Your total profit variance will get it from margin variance itself. But because of change in cost, how much of the variance we are getting already you are evaluating here. It means in sales margin variances, if cost is not changing, because of changing selling prices, what is the variance we are erasing? Understood or not? What I am trying to find out in sales margin variances, if cost is not changing, if selling, because of change in selling price, how much my profit is impacting? Understood or not? If cost is not impacting means even actual margin should be actual selling price minus standard cost only. Clear? Clear or not? Very important for reconciliation. If you understood that point only, I can make you to understand reconciliation part. Sir, first, why we are doing variance? I thought to get some profit, but I got some profit. Got it? There is difference in profit. Why there is difference in profit? Because of change in sales quantity or selling price, or because of cost. Am I clear? So because of cost, how much of the variance I am getting, I already calculated. Because of sales, either it might be change in selling price or changing sales quantity, how much my profit is impacting. If I am asking you to sell for 10, but you sold it for 12. When I am taking margin variances, if you deduct actual cost from actual selling price, obviously you got actual margin. What is actual profit itself we are going to get straight away, and these profits straight away we will get it from sales variances itself. Got it? So when I am calculating sales variances, I have to keep cost as constant. When I am calculating yield variance, I have to keep mix as constant. When I am calculating mix variance, I have to keep yield as constant. When I am calculating price variance, I have to keep quantity as constant. See, price variance, AQ into, in both the cases, AQ I am making constant. In usage variance, SP I am making as constant. Remember, in both the cases I am taking SP only, right? Clear? So if I am calculating one variance, the other one I will keep as a constant. When I'm talking about sales margin variances, it means because of change in selling price, how much my profit is impacting. It's not because of change in cost. Because of change in selling price, what is my impact? So my cost should be constant. So that in both the standard margin and actual margin, I'm supposed to deduct only standard cost per unit and then apply these formulas. Clear? And difference between budgeted profit and just by adjusting these things, we are going to get standard profit. From standard profit, again, we are going to adjust all the cost variances so that we are going to get difference between budgeted profit and actual profit. Understood? First, we will adjust up to this, and after that, we adjust all the cost variance again. Don't worry. Now you take standard cost per unit, but I am supposed to take actual cost. No, sir. The difference between actual cost and standard cost, I will adjust it. I calculate it separately already. I will adjust it later, and I will identify why there is a difference between cost. Understood? Understood? Or else just for examination purpose, just remember that both SM and IM should be calculated by deducting standard cost per unit from standard price and actual price. That's what I can make in marathon classes. If it's a regular class, definitely I'll take 1 hour to explain that one. Got it? But now I cannot, right? Understood? Okay. Problem. Let's do very quickly this 8th sum and we can close. Now, a company has engaged production of 3 products PQR, receives the following data of sales budget from the marketing department for the month of December. Standard price, actual price, standard quantity, actual quantity, revised standard quantity, PQR. PQR. I am taking sales variances. For sales variances, it has to be 1285. 1285. Okay. Next, for APUC, 15,000 units we are selling for 15,000. So this has to be 10. 2,500 units we are selling for 17,500. 17,500 divided by 2,500. So actual, this has to be 7. 3,500 units we are selling for 21,000. It has to be 6. Now what about standard quantity? That's nothing but budget only. 2,000, 2,000, 2,000. 2,000, 2,000, 2,000. Total 6,000. What is actual quantity? 15,000. Sorry, 1,500. $2,500, 3,500. How much? 7,500. RSQ 7,500 in the ratio of 1:1:1. 2,500, 2,500 and 2,500. And you can apply the formulas, right? What about sales margin variances? For sales margin variances, quantities will be the same from sales variances, but margins, sorry, standard margin, actual margin. So margins has to be 12 minus, sir, this they have given contribution per unit. That is already for here 6, 4 and 1. Contribution per unit means what? Sales per unit minus cost per unit. Already they deducted cost per unit. Then what has to be AM then? I have to find out standard cost per unit of P is equal to 12 minus 6, which is 6Q, 8 minus 4, which is 4, or 5 minus 1, which is 4. These three we have to deduct it from actual price. So it is 10 minus 6. So this has to be 4. And this 7 minus 4. Okay, answer you are saying 3. And this has to be 6 minus 4. 2. Understood AM how to calculate it? So SM, standard cost minus standard selling price minus standard cost per unit. AM, actual selling price. Sorry, it has to be selling price. Standard selling price minus standard cost per unit. Actual selling price minus standard cost per unit only. As a given margin, in working note I calculate standard cost per unit. By deducting that I am going to get actual margins. And quantities I can straight away take from, so 2000, 2000, 2000, 6000, 1500, 2500, 3500, 7500, 7500, clear? Okay. So up to this, up to sales variance, please practice and come. If you are getting 14 marks questions from reconciliation, think that it is 3 marks for you. If you attend for tomorrow's first 1 hour class, if you complete till today, think that it is 3 marks for you. Because reconciliations problems are very, very simple if you understand the concept. What frequently they are giving for 14 marks, and it has to get, you have to get 14 marks from that. Clear? But practice till today, so tomorrow you can understand easily that. Clear? Okay.